Okay. Welcome everybody to the September LNAA Finance Committee meeting. Is there any public comment?
We do not have any public comments, sir.
Public comment? Do we need to do a roll call or?
Yes, we should, sir.
All right.
All right, Frank Facciano,
Present.
Ron Heckman, Larry Hemberger,
Present.
Glenn Reedman, Michael Sturshik.
Here.
All right, we have a quorum.
Okay, very good. And then there's no public comment, so we'll move right into the into Keely Collins Pension Council report. Yeah, there you go.
Good morning.
Good morning.
Good morning.
So you're going to hear some more detailed reports later about the financial status of the pensions, which is probably what you really came for. But I thought I would start out with an overview of the top 5 legal things to know about the airport retirement plans. It's great to be with you. I remember all of you from last year. I'm Keely Collins. So I'm going to go over just 5 legal points to know about as you hear and receive the financial information today. Next slide, please. Okay, so the first change here was that there was a change in the plan administrator as to the defined contribution plans. I may be telling you something that some of you already know, but the defined contribution plans are the plans that have a particular contribution in mind that needs to go to the plan, as opposed to the defined benefit plan, which is where there's a particular outcome in mind. So in other words, there's a particular amount of benefit that the employee is guaranteed at the end, as opposed to a particular contribution that the employee makes up front. So that's defined benefit versus defined contribution. So there was a change in the plan administrator for the defined contribution plan. For those of you who deal in private sector work, when you hear the word plan administrator, you may start to think fiduciary. It's not really the same in the municipal space unless you have an agreement on behalf of the plan administrator to act in that capacity. Generally speaking, as the first bullet point says, what the plan administrator does in the municipal space is administration and record keeping. So the airport's plan administrator now for the defined contribution plans is Mission Square Retirement, formerly known as ICMARC. Now, the relationship here is not defined under ERISA like it would be in the private sector. It's defined by an agreement. So we did review the administrative services agreement that the airport entered into with Mission Square Retirement, which was then ICMARC, and we were able to give some feedback that Mission Square agreed to in the agreement for the terms between the airport and the new plan administrator. So because the plan administrator in this case is directed, meaning they're not a separate fiduciary, the airport directs everything that the plan administrator is doing, there's no real meaningful change from a legal perspective as to employee benefits. Now, I can't speak to whether there's been some kind of change from an actuarial perspective or a financial perspective, but basically what this plan administrator change means is that there would be a different administrative services agreement in place and a different provider. Next slide, please. So, and you'll notice I'm going from 5 to 1 to keep your attention, right? Because you're going to be waiting with bated breath to see what the -- legal concern is, right? So number 4, new plan documents were adopted. Now, the airport has 3 general defined contribution plans. You have 2 tax qualified plans. And then you have 1 plan that is a deferred compensation plan, a 457B plan. This is similar to your 401k plan, but just in the municipal space. So there were new plan documents adopted as opposed to just restated documents. So what a lot of employers are going through, and if you're thinking of maybe your own employer or your own company, this past year was another restatement cycle under ERISA, which is the law that applies in the private sector. Here in the municipal space, like I said, we changed over to a different administrator, and that administrator worked to adopt new plan documents. Now, there were no, like I said, it didn't create any kind of huge legal change. It was mainly done to account for, first of all, the change in the plan administrator, but then also a change in employee classification. Formerly, the airport had a tax qualified plan that was full-time non-union. That plan is now full-time non-union and also includes the firefighters and police employees. The other tax qualified plan is the Teamsters. So that union has its separate tax qualified plan. One of the reasons for this difference is different vesting schedules. So without getting too far into the weeds here, just sticking with giving you a broad overview, the Teamsters have a 5-year cliff vesting schedule, whereas the other plan, you are fully vested immediately when you come into the plan. So number 3, retroactive plan amendments. So this is the third thing to know from a legal perspective. We worked with the airport to make sure that the plan documents reflected what was done in operation. This is part of the value, of course, of having Employee Benefits Council, is that we can work together with staff to make sure that the plans are in full compliance and work through these issues. So the IRS rules do allow plan sponsors such as the airport to amend plan documents to match with the operations. So the airport already was having plans fully vest and also adding in a matching contribution feature. However, that wasn't reflected in the plans. In the plan documents. So the airport in its operation was acting in full compliance. We just had to bring the plan documents up to speed. We worked with staff to put those plan amendments into place retroactively, which brings the airport then into full compliance. And that's using the IRS's voluntary compliance procedure so that the tax qualified plan will be brought into compliance with the IRS rules. It's actually a fairly simple procedure. We just put together a memo to the file so that if there ever were any questions from the IRS about the tax qualified plan, that there would be a memo explaining what was done. But at this time, all compliance standards have been met and the process went pretty smoothly, I thought, between staff and legal counsel. Next slide, please. You will see an agenda action item to approve the 2022 minimum municipal obligations. Although there have been some moves in the legislature to adopt mirroring ERISA statute for state and local governments, at this point there isn't one. However, in Pennsylvania, there is this requirement to approve the minimum funding obligations based on your actuarial studies. So that's where your experts come into play and your actuaries, and they can determine those standards for you. So this, when you see this action item, it's required by the regulations, and it's basically serving the same purpose as the ERISA minimum funding requirements under federal law. But since those requirements don't apply, we would look to municipal law, which provides those minimum municipal obligations. And that's specified in the regulations under Pennsylvania's Municipal Pension Funding Standards and Recovery Act. Next slide, please. And then finally, you've waited until the end to see what the number one legal issue was, and that's ongoing compliance. I'm very delighted to continue to serve as the airport's employee benefits attorney, pension counsel, and continued collaboration between staff and legal counsel is absolutely our most highest priority to continue to ensure compliance with the tax qualified status in state law, we're very blessed. We don't have to deal with all of the ERISA rules. However, the tax qualified status can be tricky. We are absolutely here for you to assist with compliance if, for example, just like the retroactive amendment that I mentioned 2 slides ago, that's the type of issue that we would be here for. Also, I mentioned at the beginning that we reviewed the administrative services agreement. That's also the type of issue that we would be involved in. Next slide. So again, thank you very much for your time. I have my email address and I gave you my cell phone number. I didn't even bother giving you my office number. You can get right through to my cell phone. You know, if you ever have any questions or concerns about the compliance issues, you know, like I said, luckily in the municipal space, you really rely more on actuaries and administrators than you do on lawyers because you don't have the same legal barriers as you would in the private space. But there certainly are many compliance issues still under the IRS rules and under state law to look out for, and we're happy to help you.
Thank you. Keely?
Thanks, Keely.
Great to see you guys.
No questions there? We'll move on to Pension Administrator David Shabeta.
Can everyone hear me? Good morning, everyone.
Morning.
Yes, good morning.
It's good to see everyone again. If you could, yep, okay, thank you. I brought with me 2 pieces of information. The first is our annual executive summary. It's just a high-level overview of Wells Fargo, soon-to-be principal, roles and responsibilities as it pertains to your defined benefit pension plans. Just as a reminder to everyone, Wells Fargo currently serves as your plan's directed trustee, asset custodian, and pension payment agent. So those 3 services that are the services that we provide for your 2 defined benefit pension plans. If you could just go to the next slide on the executive summary, just a high-level overview from one of our new leaders, Shri Reddy. Shri Reddy is the person in charge on the principal side with respect to Wells Fargo's imminent transition to principal, which will be occurring over the President's Day weekend of 2022. It's worth mentioning because I know I addressed this last year. We have undertaken an account migration process in transitioning our clients from Wells Fargo to Principal Financial. During the course of, well, actually beginning at the end of 2020, we started by moving all of our defined contribution plan business over to Principal. That started in December of last year. We completed 5 what we refer to as waves of account migrations, plan migrations from the Wells Fargo platform systems to Principal. The last wave for the defined contribution plan business was completed in June of this year. So, you know, successfully transitioned over 1,400 plans, probably more accounts, and several million in terms of plan participants from the Wells Fargo daily record-keeping platform to the Principal daily record-keeping platform. Originally, our plan was then to address our defined benefit pension plan clients, all of our clients that we categorize as trust and custody, where we serve in a capacity as either a full trustee, a directed trustee, and all of our asset custodians, our asset custodian role. That was originally scheduled for the Labor Day weekend, which was earlier this month. And in July, the two senior management teams from Wells Fargo and Principal decided to take a longer pause since we came off of the 5 wave migrations earlier this year, continue to do more system and testing with respect to moving our defined benefit plans over to the Principal platform. And we've earmarked now, we've moved the date from obviously Labor Day weekend this year to the long holiday weekend, President's Day weekend 2022. So I'm participating on 3 different teams as part of that testing. So I'm pretty intimate with what's transpiring. The good news is that Principal acquired the same trust and accounting system that Wells Fargo uses, the SCI trust system. I think I mentioned this before, so forgive me if I'm repeating myself, but just to catch everyone up. So Principal will be using the same trust and accounting platform that we're currently on, which will make things a lot easier in the account migration. Obviously, there'll be some changes that we'll be communicating to you later this year with respect to branding things, everything Principal instead of Wells Fargo. You can go to the next slide. I just provided just a high-level overview of a snapshot of the account as of August 31st for both the union and the non-union plans, market value, monthly benefit payments, and the number of periodic payments that we issue to your retirees and beneficiaries. And those numbers change depending on changes in your retiree retirements and things like that. So that's an area that I'll spend a little bit more time on in a minute, because as far as our role as the directed trustee and custodian, those things are, that's blocking and tackling. We work closely with your investment manager on all things asset related. So safekeeping of the assets, settling trades, and collecting the income and dividends that are appropriate to each of the pension plan accounts. But something else that we take very seriously is making sure your retirees and the beneficiaries, perhaps of deceased retirees, continue to receive their monthly pensions. Okay, so that's just kind of the overview of the executive summary. If we could go to the next slide presentation, I included an updated timeline. If you want to just take a look at that. And yeah, my contact information is in there along with the team that I work with that support your plan and account. So we can move over to the other presentation. I just want to take you through what is more current and more appropriate with respect to an update on the account migration from Wells Fargo to Principal. Okay, so included in this presentation are what we refer to as the pre-migration timeline. So we're going to make sure we do a lot of work on the front end in anticipation of when things actually transpire over the President's Day weekend. I have 3 timelines in this presentation. They're all pretty similar, but I just wanted to make sure everyone's aware. The first one is a timeline when we communicate, and we will be communicating to your financial professionals. So your financial professionals are, for example, Oakmont, who is the investment manager. Again, as well as keeping you, the plan sponsor, informed, we're going to keep all of our partners informed as well. And you can see on this timeline. It's set up for the February 2022 migration. Really, things are going to start happening in November of this year. So I'll be pushing out additional communication beginning in November with respect to the plan migration. If John at Oakmont, again, I'll be talking with you and your team. One of the things that will change is system access. Obviously, we're going to be using a new URL. It won't be wellsfargo.com, it'll be principal.com. One of the nice things about the Principal platform is, this may not mean a lot to everybody, but those who have what we refer to as a secure token to access our system, and right now you access our system through the CEO portal, Commercial Electronic Office. Principal will have a comparable portal, and it's going to be called Principal Solutions, Principal Custody Solutions, I should say. And we'll make sure we help you re-authenticate so you have system access to the new trust and accounting system platform and some of the other applications that are tied to that platform as well. So we'll be eliminating the secure token and we'll be going to an electronic authentication, which is current, and that's a little bit easier, and you don't have to worry about hanging on to a secure token like you have in the past with Wells Fargo. If you could go to the next slide, then similar timeline for the client, Lehigh Northampton Airport Authority. Again, I'll be reaching out to you beginning in the November timeframe. We have some webinars scheduled towards the end of the year that we're going to ask and invite all of you to participate. And again, just to make sure those administrative staff that are utilizing our system, we're going to have an opportunity to do a system demo for you. I'll set that up towards the end of the year, so we can actually run through a system demo to get you acclimated to what the new platform will look like. It's a lot more simplified than the Wells Fargo platform, I can tell you that, just from an appearance standpoint. So there's a lot of good things to come, I think, with respect to the new system and the staff's access to the new system. And we have a plan scheduled through the migration timeline. Once we bring the two accounts over to the Principal platform, again, I think a lot of things will not be changing. We're going to maintain the same trust account numbers. So your account numbers aren't changing, and we're going to maintain the same look and feel of your trust reporting, the trust statements that you receive. I mean, the only real difference is going to be it's going to say Principal on it. It's not going to say Wells Fargo. You're going to see my contact information on the Principal statements, and the team that I work for is all intact currently. So you'll be working with the same people on a go-forward basis in the Principal environment. I think last but not least, we have a timeline dedicated specifically for the pre-migration communication for your retirees, your pensioners. We at Wells Fargo, soon to be Principal, will do all the heavy lifting in regards to communicating to your retirees and beneficiaries that are receiving benefit checks, monthly benefit checks. We'll be doing all the communication. You'll be able to preview all of those communications. You, the plan sponsor, the airport authority. I'll share those communications with you in advance of anything going out to your retirees, simply informing them that next year, the check that they will receive will not be a Wells Fargo check. It'll be a check from Principal. So it'll be a check from Principal Bank. So, you know, we want to make sure we give, or direct deposit, I should say, also, because most of your retirees get direct deposits, but they'll get the same communications informing them that their retirement benefit will be paid through Principal Bank. And that'll happen with the, in your plan's case, we pay your pensioners on the first of the month, so they'll receive communication in, that will tell them that their March 1st deposit or check will be a Principal, be coming from Principal.
Hey,
So
Dave.
again, yeah, go ahead,
Hey,
Todd.
Dave, we appreciate that. We're trying to stick to a strict timeline here. Why don't you circle back on the exhibit there and put your contact information up there real quick? And that way, if somebody has more specifics on the change over to Principal, they can reach out to you by email or by phone. I think you've done a really good job of explaining the transition, and that most people should feel good about the fact that it'll be pretty much seamless. So trying to stick to a timeline because we got a pretty full agenda. I apologize for cutting you off a little bit, but you know, we got a lot of other speakers, and then we have stuff after that. We got a full agenda here, so.
No problem.
Is his information up there, Siobhan? I don't see it, Siobhan.
Yeah, it's on the executive summary on the back.
Yeah, so we have that, so if anybody needs that, they can reach out, so that'll have that, and this information is being recorded as well, so if you need to circle back. But again, thanks a lot, Dave, and we really appreciate your time today. Thank you.
You bet.
Thanks, Dave. I
You're welcome.
got to tell you, so far I like Keely's presentation better. Just saying. Peter Carapolo.
Yes, good morning.
Morning. All right, beat that, Peter.
Okay, good. Good morning. I'll put my agenda up there. Board, okay. Go to page 3. First of all, I'll give you a quick summary. The plan is in super shape, and the reasons for our really strong overall financial position is, one, the authority has been making the contributions under the MMO program as required by the state. Number 2, we've had superior, excellent, whatever word you want to use for the investment performance. It has exceeded our actuarial assumption for years 19 and 20, and that has given us a very, very strong position where our assets exceed our liabilities, and I'll go into those numbers for you. This report, we do this, an actuarial study every 2 years as required by the state. It's done on odd years, 2019, 2021, 2023, etc. The prior report, as I say, was done in 2019. This report that we're doing and that we'll cover is for the 2022-23 MMO contributions. So the report we do and we've done is the basis for the contributions for the next 2 years, regardless of what happens to the market in year 21 or 22. The contribution is based on the 1/1/21 valuation report. Very unusual. Okay, go to the next. We've also had some changes in the plan design that have been positive in the area of containing costs. These changes are effective depending upon the individual plan that we're talking about. The non-union, for example, all participation in the plan was frozen to employees participating in the plan as of December 31, 17. Anybody hired on or after 1/1/18 are going into a defined contribution program. So new employees are not going to have a formal pension plan retirement benefit in the future. They will have their pension benefits based on the defined contribution program, which will reflect the contributions that the authority makes, any contributions made by the employee, and the investment performance for the time period during which the employee is a participant in the plan or continues to have that money in a subsequent IRA or whatever vehicle he uses upon termination. Okay, we could go to the next one. Now, that kind of cost containment is not too dramatic today, but it will slowly accrete to the plan. It will be reflected in the future and eventually will have a very positive influence. In the union area, firefighter employees, again, they were hired prior to 1/1/19, continue to receive benefit accruals. They stay in that plan, but after 1/1/19, they're not eligible to participate in the plan. Again, they are eligible to participate in a DC program. Go to the next slide, 6. Now, police and Teamster employees are a little bit different. The police employee basically was given an option between new employees, between hired January 1, 20 through December 31, 21. They were given the option either to stay in this plan or to take the DC program. Now, this was defined in the collective bargaining agreement, so it's clear that this option was negotiated between the union and the management. Teamster employees weren't subject to any of these restrictions. They continue to be only in the defined benefit plan and receive annual benefit accruals under the program. So they have not experienced any changes. Next slide, please.
Hey, Peter,
Yes.
I do want to point out on the Teamsters that they are contributing, new hires are contributing toward the defined benefit plan. So they are contributing, so new hires are contributing 2% toward that. So even though they're not going to the DC as of yet, they are making contributions. They're the only group that contributes to the new hires are contributing to the defined benefit plan. So I just wanted to point that out. They are doing
And
that.
that their contribution, theoretically decreases the overall cost of the plan for those participants. Okay, number 3, the
Well, it's a small amount,
municipal pension
yeah,
reporting
every little
program.
bit helps.
Pardon me?
No, go ahead, Peter, you're fine.
Okay, the municipal pension reporting program. The state has this program that it evaluates all municipal plans, including authorities, with a program, and they assess a score. Now, we had a score of funding ratio of 87% in the 2019 valuation report overall for both the union and non-union plans. With an 87% overall score, you ended up with a distress score of 1, minimal distress. Now, this score that the state has is basically 90% to 100% funding ratio will give you a 0 score, and that's like an A. And then from 70 to 89%, where we fell in 2019, it is a minimal distress score of 1. From 70, from actually 69% down to 50, they consider that a moderate distress score or 2. Frankly, anything under 70%, especially in today's environment, means they have that fund has severe funding problems. So the range is, in my opinion, from 70 to 90 for score 2 is a very broad range. It certainly would not give you a B level score if you were taking an academic course at college or high school. 70 would be like a C or lower, C minus. So
It's failing at St.
next
Joe's.
page, we'll go to.
Hey, Peter, before you go to the next screen, in terms of our current funding level at 106%, if we were to drop our investment assumption from 7.5 to 7.25, ballpark basis, what impact would that have on our funding ratio?
I can't give you a precise.
No, just the ballpark is good.
A quarter of 1% would probably reduce your or increase your liabilities by, 3-4%, easy. So it would have an impact.
Yeah, so we're talking about like 106 to 102?
He said a quarter.
Probably down to around 101, 102, yes. But that's
You just said a half. I thought a quarter.
an off the cuff estimate.
I thought you said a half.
I figured it started a quarter and we'll go from there.
Yeah, okay.
You know,
We'll talk about that later.
If you're thinking
I know you're gonna
about
talk.
reducing the interest rate, 1/4 of 1% is not going to move the needle enough. So if you're going that route, then we can give you the actual impact of 0.75% drop, 0.5% drop, full 1% drop, whatever. And it's not only on the funding ratio then, it also reflects the MMO in the future, because your liabilities will be higher, so therefore you have to pay, a higher MMO.
Yep.
So there's 2 costs, not only on the funding, but on the MMO.
Yep, understood.
But the 7.5% interest rate that we currently use, we've discussed this with investment counsel in the past, and they have felt comfortable with a 7.5% interest rate over the long term. I know that out there on the street today, there's a wave of people who are looking at interest rates and saying, maybe these rates should come down from 7.5 to 7 or whatever number the investment manager in conjunction with the actuary decide. The investment manager has to be comfortable with the 7.5% interest rate over a longer period of time. We're not talking about 1 year, 2 years, 3 years, but we're talking 10, 15, 20 years, 25 years, because we're talking valuation reports for a generation, not for a 2, 3, 4, 5 years. Nobody can project investment returns over a short-term horizon. Okay, any other questions on that interest rate option?
No, thank you.
Okay, go to the next slide. And here's what we're seeing in this particular slide. The key point is if we don't get a 7.5% interest rate return from our investments, then contributions will increase in the future, depending upon what kind of return you receive. You know, if we run into a disaster year like 2008, 2009, it will have a significant impact on your funding level and on your contribution. Okay, go to the next slide. Okay, next one. What we're doing here is we're going to look at the individual liabilities for each plan. If we look at the last 3 years of experience for the union and non-union programs combined, we've gone from 86% funded level in 2017, 86% to 2019, 87, and now we're at 106 in overall funding level. The important thing to look at is in 2021, you see that $932,000 number with parentheses. In the actuarial profession, parentheses means it's an excess asset. It's not a deficit. There are excess assets. So when you look at the liabilities of 15.947, the assets are 16.879. So in effect, if you were theoretically, if you shut down the plan as a 1/1/21, then you could go out and buy annuities to replace all the benefits as a 1/1/21, you would have had in excess assets, assuming you could buy annuities for 7.5%, which are not available in the current market. But from an actuarial standpoint, using the 7.5%, we do have excess assets of almost $1 million. Okay, we'll go to the next slide. We're going to look at the summary history from 2011 to 2021. And this tells you the history of the funding ratios overall. Starting in 2011, we were 87, 95, 103, 86, 87, now 106. So the progress has been positive. This by far is our best year from a financial point of view. So that gives us if there's another slide after that.
That's it.
18, 19, that's it, right?
That's it, Peter.
Thank you, Peter.
If you have any questions. So overall, the fund is in super shape with a strong financial position of assets in excess of liabilities. And our goal is to continue that in the future.
All right, thank you, Peter. Great job.
Thank you, Peter.
All
You're
right.
welcome.
John Kateski, you ready?
Yes, I am. Can you hear me?
Yep.
We can hear you, John. Good morning.
Okay. Let me see if I can share my screen here.
Who's got the marketing back on?
Can everyone see that?
Yes.
Yes, John.
Okay, perfect. So this is a big report. I know it was emailed out to you. There's 73 pages, but we're only probably going to talk about 10 to 12. And just the order of it is, we'll just give you a brief market overview, and then we'll talk about the defined benefit plans and then the defined contribution plans. As a quick summary to the DB plans before we get into the market is, as Peter just stated, over the last 5 years, the plans have returned about 10.5%, which is roughly 3% above the 7.5% return assumption. And, you know, to try to put that into numbers, an extra 3% a year on 10 million bucks, that means it has generated about $300,000 in excess return. And, you know, do I think that's something that's going to happen over the next 5 years? You know, maybe, maybe not. But it has been a really good number for a defined benefit plan. And one other thing that has added to that excess return, and, you know, this started, you know, back in, you know, 2015, 2016, when the authority did a search, and you went out, re-looked at the plans, and, you know, you actually brought the fee structure down, you know, it lowered it in the plan by almost, you know, 0.8%. And if you wouldn't have done that, and a big portion of that is by introducing passive management into the plan. And, you know, without that 0.8% savings, you know, your return over this time period, you know, would have been roughly, you know, 9.7. So even though costs are always talked about, you know, they do have a real dollar impact on the plan. And, you know, 1% on 10 million bucks, you know, that's savings of roughly 100,000 a year. So it does add up. For 2020, which was a crazy year, I think everybody would agree. And, you know, the market was down, you know, roughly 34, 35% at one point. It then turned around and made a new all-time high by the end of the year. And, you know, over that time period, your plan compared to your peer group, other professionally managed plan, you know, ranked in the top third. The annual contributions are up to date. The next one, which you have traditionally done, is made in October, near the end of October. So that's right around quarter. The plans are always fully invested in a diversified portfolio. And, you know, we don't do any market timing. Sure, we'll lean the portfolio one way or the other, but, you know, you would never hear us say, hey, we don't like the market, we're going to cash, or, hey, we really like the market, we're going to, you know, tremendously overweight equities. And as I stated earlier, half the plan assets are index funds, and that's on the large cap and the fixed income, a big portion of the fixed income. And that's running at less than 0.1% for that product exposure. And pretty much all the fees, you know, all your vendors that are on this call are paid pretty much, you know, from the plan. There's some, you know, small ones that may not, but most of the fees are paid from the plan. Right here, this is a summary of the plan. Roughly back in 15, the beginning market value was, you know, 5 million. Over this time period, with your contributions and the money played to participants, roughly 800,000 have come out. The investment gains over this time period is 4.4 million, with the value as of, you know, this is actually through June 30, 8.7 million, and that's the same on the union plan, 9.7. We haven't made any contributions yet, but they are coming around the quarter. And I think here it is, right here. So now we got a summary of the plans. We'll get into performance, but this is just what is driving performance here. And as you know, COVID's been a big factor. The COVID and the Fed are the two main factors in the market right now. And, you know, this chart's just real interesting, and I thought you guys would find it. You know, coming at the end of June, this chart's updated through August 31st. The blue line is confirmed cases of COVID in you know, as a moving 7-day moving average, and they actually bottomed out. And, you know, we have seen a spike recently, you know, back up to this level here, which is, you know, pretty much where we were coming into the new year. And then also fatalities are creeping up, which they were, you know, in early summer, spring, they were making a low. It was almost pre-COVID levels, but now they have rebounded. And the market has been a little grumpy about it, but it has not really, you know, caused any major sell-off. And over on the right here, this is just, you know, everybody talks about herd immunity, and how do you get there? Being vaccinated, being sick, or a combination of being sick and vaccinated. And some of the models suggest that we're almost there, but which kind of contradicts what's going over here, and that might be due to some of the variants. Over here, this is the rollout of the COVID vaccine in the various countries. The only number you don't believe is the China one. Everything else is pretty accurate. The U.S. is a little bit less than some of the other developed countries, the UK, France, Germany. The country that's really suffering where they're trying to get it out is India. So the global health system is getting the population vaccinated, which I think the market is recognizing. Right here, real quick, this is the unemployment rate. As you remember, there was a shutdown last year. This chart goes back to 1972, and this is where we were in April of 2020. Roughly 15% of the workforce that wanted a job was unemployed. Today, that has fallen back below 6%, which a lot of economists view full employment is between the level of 4 and 5%. But what is interesting, and I think everybody on this call that's in a business or looking for employees, you're starting to see wage growth, which is this blue line. And, other than that bump, there was some noisy data during COVID. Wage growth is picking up. You have to go back to 1984 to see wages. And, some people could argue that is a source of inflation. Here, this chart we show all the time. It's just the S&P 500 from 1996 to current. This is a tech bubble over here, financial crisis, but this is where we are. So last year, February 19, 2020, we were at a new all-time high. The market sold off 34%. It bottomed in March of 2020, and now through August 31st, we're roughly 102% from the bottom, which is just incredible that we've gotten there. But as you know, they've put a lot of money into the market through the stimulus plans under Trump and Biden, and now we have another infrastructure plan. So you could argue the market's looking forward, but here is just, if you can see it, I know these numbers are small, but this is PE. This is just valuation levels of the market of the S&P 500. So right before the sell-off of the tech bubble in 2000, it was roughly 25.2. Before the financial crisis, it was 15.1. Fair value is considered 16. Right last year, before COVID, it was at 19.2, and currently it's at 21.4. So roughly, the valuation is somewhat elevated, but just because the market's overvalued does not mean it has to sell off. We need a catalyst to make that happen. And this just shows standard deviation around those valuations, meaning here's the average, here we are now, and we're more than one standard deviation away from the fair value average. On this one, this is just interest rates, and this is a key factor because everybody's talking about inflation. Inflation's coming back. I know if you're filling up your car, you're feeling it. If you're buying construction materials, you're feeling it, even some of the food prices. But the bond market, by definition, has an embedded inflation rate in it. And so far, as of August 31st, the embedded inflation rate was roughly 4.2%. Is it a slightly elevated relative to the 2 to 3%? Yes, but we're not seeing at any level runaway inflation. And that's what the bond market. So this is the yield curve in the bond market. And all this means is if I lent my money to the U.S. government for 10 years, the purple line, I know it's small. In August of 2020, they would pay you 0.5. Today, they would pay you 1.3. And back in 2013, they would pay you 3%. If there was runaway inflation or the bond market, which they usually get it right over the stock market, you would actually expect a larger uptick in bond yields. And I don't know if you followed, but yesterday was a Fed meeting, and they indicated they are going to start the taper process, which is just a fancy word for increasing rates, most likely beginning next year. And the Fed, they control this end of the curve. So you most likely, according to them, see rates increasing. These, now back to the plans, these are the contributions and withdrawals that you've done over the years. You roughly take out $30,000 a month for the plan, and these are your large MMO contributions. So in the fourth quarter of last year, you roughly did $227,000. In the non-union plan last year, you roughly did, 461,000 in your MMO contribution. Okay, both plans are managed the same way. This is the allocation. Here's the target. We want you 40% large, 5% small growth equities, 10% international, 40% fixed income. This right here, this 2.4 cash, we have to keep a certain level of cash in there to pay the participants on a monthly basis because you only make one contribution per year. We don't want, not that it would ever happen, but, we don't want a participant, show up, try to cash a check and there not be, cash available. Wells Fargo, they wouldn't even allow it to go that far. But that's why the cash is in there in any fees. And that cash is kind of significant just because when the market's going up, it acts as a little bit of drag in performance. And when the market's going down, it actually helps performance because in your stated benchmark, you don't have a cash allocation. So this is the performance, and this is the blue line here is at the total plan level. This is the union, and this is the number. 5 years ending August 31st, it's roughly 10.7 versus your index at 11. So it's 0.4 differential. A lot of that is the cash or the fees. But, this is the number here that you're trying to do the 7.5%. So roughly every year for the last 5 years, you've done 10.7, which is, historically pretty attractive for defined benefit plans. As you can see here, this is the S&P 500. You have 3.5 million in the S&P 500 in the union plan. The small cap guys, you roughly 400,000. This is one part of the plan that we are looking at. So these are active guys that are trying to beat the market. And right now, Goldman Sachs and Northern Small Values a little bit, their style is a little bit out of favor. But that was also the case with the small growth guys not too long ago, but they have now come back. And these guys are also active. They are now out performing the market. So you can scroll through the different performances. This is the fixed income. Nothing that concerns us. This here, just so you know what you're paying, this is the estimated cost. So you're running this plan, including our fee, the investment product fee, at roughly less than 0.4% a year, which is really attractive. And this chart we talk about, once a year. It's just, the performance ranking of the plan. The goal is to be in the top half of the universe. You could pick a time period here, like 3 years, whatever, 5 years. We kind of look at the longer numbers because they're more significant. So what that 41 means is that, your 10.7% return over the 5 years, you've been in the top 41% of professionally managed pension plans. If we were able to get the index with, without the fees and stuff, you would have been in the top 31%. So just that 0.4, 0.5 differential, is slid you down a little bit. But, this is a real number versus any number out there, as Peter said, is, are you beating the 7.5? Here you can scroll through. Those are just different characteristics of the portfolio. This is the non-union plan. Everything's literally the same. The only small variances in performance is cash coming in and out of the plan. Here's their fee. It's 0.38%, roughly, the same number. 5 years, roughly the same, performance group. And those are the DB plans. Before I go into the defined contribution, do you have any questions regarding the DB plan?
No.
Okay. Next one, last one, defined contribution plan. This has been a work in progress over the last 18, 24 months. As just for backfill in history, the DB plans were first looked at, what we got, whether it was reviewed by Keeley to the team. We got the documents up to date on the DB plan. We got it invested. We got the fees down. Then the retirement team, internal LNAA people and external advisors. We then moved into the defined contribution plan. And now I think everybody would agree we're in a good place. The plan has been, it's been around, back to the early 2000s, even the 90s. And now we actually have a really strong structure around it. And part of that restructuring was moving it from Mass Mutual to Mission Square Retirement. They were formerly known as ICMA. Their specialty is government plans. A key factor is you have 3 defined contribution plans. All the plans have now the same fund lineup. So when an employee looks into the plan, they don't have to look at different investment options. They are identical. Similar to the DB plan, we put index and active investment options into the plan. And now, this is another important one, is the Vanguard Life Strategy Conservative Fund is the default fund. If an employee goes into the plan and they don't pick an investment option, previously they would just go into the money market fund. Now they go into a fund that has roughly 30% equity, 70% fixed income. They can switch out of it if they want to, but from a fiduciary standpoint, that is a better investment option for them than having the money, sit in cash. The last 2 points, everybody, participant education not often talked about, but we spent a lot of time doing it. Previously, LNAA was doing it internally, bringing in outside speakers. Now, through the Mission Square relationship, they now have a dedicated participant education person that comes on site. I think they owe us 2, if not 3, sessions a year. And probably the most important is that last one is the education is starting to show. And I'll talk about that. These are this page here. This is just who's doing what in the defined contribution plan. We went through, we reviewed everyone. Now I think it's in a good spot. This is the market value of the plan. So as of 8/31, in the defined contribution program, you have a roughly 5.7 million. This is the 401A, non-union 401A union, and the deferred comp. As Peter mentioned earlier, almost, majority, if not 90% of the money coming in will be going into these plans going forward. So even though it's 5.7 million today, relative to the DB plans, it's small, but this, should, in terms of new contributions, grow faster. This is just the contributing, who's contributing what. This is the one I wanted to show you about participant education. When it was at Mass Mutual, roughly 60 to 70% of the assets were in money market, meaning the participants would enter the plan, they wouldn't make investment elections. And, the team was trying, we were doing education, we were trying to get them to move, but now it's actually starting to work. You can see the assets start broadening out versus, other investment options, whether it's, equities or fixed income. The key takeaway is that, they're starting to transition out of the money market portfolio. And this plan here, this is right here across the bottoms is the fee. So the 407B plan, you're running it at 0.42, the 401A 0.48, the other 401A 0.43. So like the DB plans, you're at less than 0.5%. Here are the investment options. They're all performing in line. Like I said, we always focus on the longer term numbers. These are new funds to the plan. They've only been in there for a year, I think, roughly a year. And so we're going to continue to refine the oversight of the defined contribution plan. The one last step is we have an investment policy drafted. We just have to ratify it. We're also scrubbing some of the numbers at Mission Square to make sure that they are capturing correctly the active participants. And the one number that we're really interested in is active participants not contributing. We're trying to identify who they are. We want to understand why they're not contributing. If it's something that they just don't know how to log in, or they don't want to do this, and this, we want to make sure they have the information, because we do want to get the people that are not contributing but active and eligible to get in there. And Yeah, sorry for going so fast, but that was a lot to cover. And if you want to read about the investment options, that's what these last few pages are. So does anybody have any questions about the defined contribution plan?
No, I think you did a good job going
Thank
through
you,
those
John.
73 pages there, John.
Yeah, and I think they put my contact in for if you guys.
Yes, we need it. If anybody needs it, I'll make sure they
Yeah,
get
it's
their
right
contact
there.
information.
Yeah, it's right there.
Thanks again, John. Great job. No other questions,
Okay.
anybody, right? All right, thank you.
Thank you. Turn this on.
All right.
All right.
That was the first hour of our finance committee meeting.
Well, we're pretty close to one schedule there, so now a few minutes over, but for the most part, pretty much on track.
Okay, cool. Move into the meeting.
Yes, by all means.
We get the approval of the meeting minutes from August. I have a motion.
Moved.
That's Michael. I'll second. All in favor of approving the minutes? Say aye. Aye. Thank you. Just go into the approval of the MMO. That's based on what we just
Yeah,
saw.
I'll walk through that. Every year, as you heard in the last discussion, we go through our MMO for 2022. This year, because of our funding level, the numbers actually come down from previous years. So this is a letter Tom put together. It's in Novus. You can see this here. It comes out to approximately $539,000, and that's a combination of the minimum contributions for both the defined benefit and the defined contributions. That is the minimum in which we contribute. And one of the things I'll mention before I go to the next slide is what we're going to do, and you heard it in the presentation, we're going to make these payments quarterly as opposed to once a year like we're doing now. So next year we're going to make 4 payments, cut them in 4, so that way it gives them a little bit more ability to manage the cash a little bit better. So again, it's just a better way of doing things. It's not going to impact our cash flow that much, but just one more thing we can do to make things a little easier. But this is both the DC, as he said, the defined contribution and the defined benefit. Next slide. So this is really which really I wanted to focus on here. So if you go back to 2016 down toward the bottom there, you can see almost $380,000 that we made in our total contributions. And part of the reason we made so many of these changes is because how expensive it's getting long term. And we really want to be good stewards of the plan, which is part of the reason we made some of these plan changes. So last year, total MMO was approximately $786,000. You heard John mention earlier about maybe cutting the interest rate, some of those things. So what we're trying to do is let's just stay because the MMO went down, and you'll see at the bottom, 2022 LNAA MMO, 539,000, which was on that first page. Let's just stay close to where we were last year. Keep us on a steady course. Again, we'll pay it quarterly. It has the same advantage of lowering the interest rate, but what it does is it puts it in our hands as opposed to making it a requirement under the MMO. So what I'm proposing is the 539, and because we've got Teamsters, when you heard me mention that earlier, the Teamsters contribute to the defined benefit plan. They didn't switch over, but they are contributing to the defined benefit plan. So there's their $12,000 that we talked about earlier. But then the extra contributions down there that'll get us approximately where we were for this year of about $800,000 for the year, and we'll be making that quarterly. And some of those contributions will go to the people that contribute to the defined contribution plan. So they'll get an extra 2%. Right now, it's roughly 6% for folks, but they'll get an extra 2% next year as we're making these extra contributions. But again, what we want to do, because at some point we all know we're going to be struggling again. So if we keep at the 800,000, it just keeps the engine rolling, and then hopefully we just keep the 800, keep it going, and that way we don't have to worry about as much of lowering the interest rates and some of that, because we're just staying the course. So I think that's the right thing to do, but I wanted to bring it to the committee. Again, it's all about being responsible and taking care of folks. You know, I always worry that there's nothing behind these pension plans. And if, God forbid, people are flying off of the rooftops 20 years from now, nobody's going to send any money to help these plans, and these folks are going to have to take cuts in their pension at that point because there would be no money behind it. So this is just us trying to be good stewards and, again, manage it without lowering the rates and all that. So I think it's responsible, but I wanted to bring it to the committee at this point.
Okay. Does anybody have questions for Todd regarding the 2022 MMO
Or the extra contribution.
or the extra contributions? All right, then could I get a motion to approve the 2022 MMO for pension?
So moved. Second.
Michael and Larry. All in favor? Aye?
Aye.
Excellent. All right.
And then I'll walk through the financial statement, a little different. If you remember, we had in July, our best July on record. We were just booming along, got knocked back to earth a little bit in August. We still had a good month, not as good as obviously July, but that was about 10% lower than our August 2019 number. Still a little bit higher than we were in 2018, but the year-to-date number I think is really important. That's why we noted it here. We're 8% higher than 2017, and as you remember, when we did our budget for 2020, we kind of used the 2017 as just kind of our benchmark of, okay, let's just use that as kind of a level we thought we could be at to manage our costs. So the fact that we're up from that number year-to-date should make us all have a deeper sigh of, whew, we're okay. Next slide. And you remember we did the budget amendment last month, and this was really critical. So rather than go through, and you'll see in the package that all the budget amendments are, or all the year-to-date budget variances are zero, because we just made this amendment. So rather than say, all right, it's -5, -5, we just said this is our starting point, because we knew that a lot of the extra revenue was going to come in July and August, and those expenses are going to be on the back end. So what you have here is, just so you can see, this is January to August, and you can see some comparisons there of kind of how things are. So 2017, so the first 8 months, we're about 2.9 million in net income, okay? 2.8, in 2018, about, again, 2.9 million of actual income, net income through 8 months. Now, again, there was no CARES funding. Okay, 2019, 2.4. Last year, no CARES, you can see that negative $1.9 million through the first 8 months. Our original budget kind of mirrored that number because we didn't know, and remember we had that first half, let's just be conservative, and then the second half. So you can see what's going on there, and then you see all the way over here, if you go down there, remember our $68,000? And John will attest to this, that's not a good number when you're talking to the bankers and you say, hey, I got net income of 68 grand. Yeah. They definitely treat you like a stepchild when they hear that number. So what we did with the last amendment, you see where we are without CARES. So we're slightly over $1 million with the last amendment that we just did through 8 months. But again, that extra revenue that we saw is really during our peak time of July and August. And a lot of those expenses you're going to see on the back end. We're going to see them in the last 4 months as we try to make some adjustments. So this is kind of what we budgeted. So we budgeted, without CARES, at this point, a loss of $2.4 million to the end of the year. So that would take us to a negative $1.5 million. But that excludes CARES. Really important to keep that in mind. That excludes CARES. And the bulk of the CARES, part of the reason we had a phenomenal month of August is we got almost all of our CARES money in the month of August. We got 2.4 million of our CARES money in August. So August is a phenomenal month. But if you see over on the end, hey, it's 2.3. Now, I think that we'll do a little bit better than that, but this is kind of what we budgeted. We keep chasing kind of a moving target. But I think we should feel good knowing that, hey, if somehow we can break even, which I think is a little bit of a stretch, but if we can kind of manage our losses between now and the end of the year, which we're going to do our best to do, be responsible, we should be ahead of where we thought we would be budget-wise. But again, it should all make us feel better, and that's part of the reason we made these budget amendments. Does everybody follow that? Because again, you can see on those first two amendments, we never changed the net income. We got that additional CARES money, we said, let's spend it. And that was, the net income never changed. It was still that 68 grand. But the last one, we said, you know what? We got a better view of what's going on. We're going to be, at the end of the year, 2.4 million. If you see where we are now, we're about 4.4 million year to date already. But again, we anticipate some tough terrain from now to the end of the year because of some of those amendments that we did, and that's all planned. So it's really to kind of manage the expectations for the rest of the year for everybody on the board that we're on course. Anybody have any questions?
Yeah, just one time. Can you break down, give us a couple of the larger expenses that are basically back-ended into
Well,
2024?
a lot of those are the additional expenditures on personnel.
Okay.
Because there's a ton of positions that we just added.
Yep.
And I think we just ran the numbers. I mean, I think it was like almost close to $500,000 if we came in, 9-1 on.
Okay.
Obviously, we're probably not, but that's how we budgeted. Like, if we get all these folks in here on 9-1,
Yep.
it's going to be $500,000 just for them. And then you got some other adjustments that we got to make based on what's going on.
If you could just, for the board meeting, just bring the top three.
Okay, and we talked about them before on a macro level, but again, you got to keep in mind some of the things. The most important thing, and if I looked at this as a board member, go, all right, we were at 68 grand, we're at 4.4 million through 8 months.
Yep.
Fantastic. However, that includes CARES, and we've made some additional expenditures which were necessary.
Oh, yeah, I'm not
No,
arguing.
again, I
just
know
wanna
what you're
remember what
saying,
they are.
but I just want to make sure everybody follows it because
Yeah.
your point is a good one, which is, hey, that's a lot of money. What does, remind me what's in there. Okay, yeah, okay. So that makes sense. Next slide. Again, this is our top scan. We never really go through, we always talk about the top ones, but I think it was important this time to kind of walk through. If you've always heard me say airfield and terminal are supposed to be close to break even. But if you look here, and this goes hand in hand with some of our changes to our rates and charges, you can see we're losing some money on both airfield and terminal. Because that is infrastructure, and this goes back to years ago. Before we were here, where somebody said, I'm not going to charge you for that. I'm not going to charge you for that. I'm not going to charge you for that to keep the rates artificially low. But obviously, those depreciation numbers really hit hard on the airfield and terminal when nobody's paying for them but us. You see that? So going forward, they're paying for everything, but there's a lot of old stuff that they aren't. So that's part of our change in the structure, so they understand that they're getting a lot of stuff for free that they kind of forgot about. Okay? And then you can kind of see, again, parking, aviation services, but then you get down to the bottom. And this includes admin, it's all rolled in depreciation. This is the net income that goes into every number. And you can see kind of how it breaks down. And then you get to you heard me say 4.5 million down at the bottom there. But obviously that includes a bunch of CARES money. You see 3.5 million of that money is coming from CARES. Next slide. This is our cash flow. We're getting to the point where we have minimal adjustments. Most of our adjustments every month usually come on capital, just timing of those things, and they're such a big number. If it's moved back a month or two, it significantly impacts cash flow. So that's why those numbers are usually yellow. We reduced these numbers up top a little bit again. Some of this due to the Delta variant, some of this just being a little bit more conservative in our approach on our cash flow. Next slide. Now you can see here, again, like I mentioned earlier, those items in yellow, it's just some of that just timing. You see, hey, we were going to pay something in October, but we ended up thinking now we're going to pay it in November. It's just always shifting, but there's such big numbers that you have to kind of point them out because the timing is hard to predict. Now you'll see there on that line 26, we originally in our budget amendment, we had approximately another 400,000 that we were going to get in CARES for November for the last piece of CARES. And what I'm suggesting at this point is that we're not going to do that. we're going to forego that CARES money and use it next year. Because a lot of these expenses, as you heard me say, we have all those expenses. The real impact is going to be next year. Because you got the full year's impact of all that money and not just 4 months of it. So you're going to need some cushion. And again, like I said, we're at 4.4 million. That money's not going away, but we have to use it creatively, because the more we put in there, just so everybody's clear, not all income gets to stay in our pocket. We have to give us some of that back to the airlines in settlement. Remember, even last year during COVID, there's a $400,000 number that we're returning to the airlines, even not last year. So more money there, if we don't necessarily need it for expenditures, just kind of goes out the window back to the airlines, and we'll need it down the road. So let's not just give it to them. So that's part of that. And you can see down at the bottom there, we're talking about cash flow at different levels. If you go back to our original budget, it was like 49,204 a day. I said, all right, let's just bump it up 12% as we get closer to some of these new expenditure lines. And you can see what happens to the cash flow. And then if we go back to 2019 level, which is pretty much of a stretch, but you can see what that does to the cash flow at that point. You're also seeing in there, and I showed it last month, where those contingency and those other reserves are being adjusted accordingly as well. And line 33 there, we are talking about reserve for future debt service. That number at some point is going to come off, because we're going to start using more and more of that, of the actual debt that we had before. That's just a placeholder for when we start having to pay it. So at this point, it's just kind of, hey, remember, we got to pay this. We're going to have to pay this every month. And at some point, instead of it being there, we'll actually be paying it in debt service as we start using more and more of that when the connector. I think that's it. Next, yeah, that's it. Any questions? I know I went through a lot there, but it's really important because we've done so many budget amendments, and this year's been so challenging along with last year. We just did this amendment 8 months in, feel good about where we are, knowing what's coming for the next 4 months.
Any questions regarding Todd's financial statements? And can we get a motion to approve them? Mike?
So
Second.
moved.
Second? Larry?
Second.
Second. All in favor, say aye.
Aye. Aye.
All right. Now you want to present the audit?
Oh, yeah, sorry, I forgot about the audit. So, I don't know if I had an actual, I put these up in Novus here. I guess that was that yesterday? Let's check. Was it yesterday?
Yes.
Gosh, it seems like, oh, wow.
Yes, it
I'm
was.
still thinking of spreadsheets there, Frank. But we had 2 finalists for our auditor, Cherry Beckett and Crow, who's our incumbent. And if you remember, I think it was 6 years ago, because Crow's been our auditor for 6 years, we had been with Campbell, a local firm, and one of the reasons that we switched is because we really wanted an auditor with airport experience. Unfortunately, we're the only airport. So Campbell, we were the only experience that Campbell had. And interesting enough, they did not bid on this one, which was interesting to me. So as part of our due diligence, every 5 years, we usually go out to bid. We didn't do it last year because of COVID. So this year, we put it out to bid to see what was going on. And these were the only 2 firms. There were some other firms that presented nothing local, but there were some other firms that had some good experience, but not in the airport realm. They had one airport, one FBO, but we wanted somebody who could really understand our business and what we're going through, and that's really critical for us. So the final 2 were Crow, who, like I said, is our incumbent, and also Cherry Beckett. And we had those interviews on yesterday, and they're online if anybody hasn't had a chance to look at it. And it really came down, both of them are great firms. We checked the credentials of all of the firms. They're good firms. But it really boils down to, I think, who was on the call that said that? Glenn, that said the devil you know versus the devil you don't. And it was basically, look, we haven't had any problems with Crow. They've been forthright in all their fees. It's worked out well. They seem to work well with the board. And one of the things I thought was important is whenever I call them, and we do check with them, it is a relationship throughout the year. I talk to the partner and I call him direct. I'm not dealing with some other person. We get direct access to Scott, who is a partner that comes in and does. So I'm not dealing, I mean, we deal with some of the other folks, but that's the person, for example, when we've had other challenges during this year, they know about it. So it's not like, hey, what's going on there? They're not surprised. And that's been really critical for us there. And then, but the other thing, and one of the references that said it would, because everybody says, oh, you know what? Transition will be easy. And it'll be seamless. Everybody says that, but in the COVID world, I mean, I was telling the folks here, we used to have them, if you've been up on the third floor, they would be in the hallways. That's where the auditors would be. We'd put some table out there for them, and they would be literally in the hallway, and they come over and they point at you. And there's a lot of kind of onboarding, getting comfortable with your business that is necessary. And in the COVID world, a little nervous about that. If we had problems with Crow, I would say, hey, you know, it's time to do that. And if we had not, if this was when we switched from Campbell, I think it would be, we might even go with Cherry at that point. But given what we already have with Crow, I think it's a good relationship. The costs become negligible because even though on the surface, Cherry Beckett's costs were a little lower over the 4 years, they're going to nickel and dime you with some other stuff for travel and some other things.
3 year?
Over 3 years, excuse me, over the 3 years. So the cost was, we didn't think was going to be significant. And again, when you're dealing with professional services, it's really about the qualifications as opposed to the cost. So again, that's our recommendation. Obviously, they report to the board, and the board has to be comfortable with them, but that's what the staff recommends, that we stick with Crow. So at this point, I'll open it up to anybody who's had a chance to look at the presentation. I know Frank was there and Glenn was there, but anybody else that has an opposing opinion or a different
Like
thought?
you said, both great firms. There was, what was it, 14,000 over 3 years less for the Cherry Beckett proposal, but there's an opportunity for additional expenses with them, and we've gone 6 years with Crow with virtually no additional expenses.
Correct.
And like you said, we know them.
Right.
So does the Finance Committee recommend to the board? Go ahead.
I'm a big proponent of, if it ain't broke, don't fix it. And if we have a good relationship, especially with audit services.
All right.
Yeah, I would agree with Mike in that regard. The part I was able to watch the recorded version, so thanks for doing that. That worked nicely. Both have the expertise necessary. If Cherry Beckett brought something additional to the table that Crow didn't have, then I think we'd have a different conversation. I didn't hear that when I listened to the presentations. Both have the industry expertise that we need. Yep. I thought it interesting that they spent a lot of time talking about secure FTP sites, which have been around for 20 years. They could have skipped that part and shortened their presentations pretty dramatically. But no, I agree with Mike. I think we've got a good relationship with Crow. I will say at the end of 3 years, it might be a different conversation simply because I'm also a proponent that there is value to bringing a different set of professionals in to look at an organization periodically. Sometimes you do need to rotate out, and it's not a negative toward the entity that we're rotating away from. It's simply people look at things differently, and that can have benefits in and of itself.
Agreed.
Where we are in terms of the time frame now, that doesn't concern me at this point, but it might be a point of conversation 3 years out. But I agree, I would support Crow.
And just to build on your point, John, one thing that I think could be helpful would be to just, and I don't know that we're at this point now, but something to consider for the future is just saying we're going to change no matter what, right? And just take that, so there's no, so that firm, so we can start to do the prep work. Because whenever, and I've been through enough organizations now where there's the discussion about changing the auditor, but ultimately you default to whoever was there before because you don't want to go through that transition period. If you start to do the transition work beforehand, if you select an auditor because you know you have to change and you select a new auditor a year in advance, you can begin a little bit of that transition work. That's, you know, I don't know if that's advisable right now, but your point is well taken, but it's also completely not actionable
Oh, not now.
Because
Yeah.
we'll roll up to whatever the exchange period is, and we'll do the same analysis, and we'll say, well, if it ain't broke, don't fix it, we don't want to deal with the transition, and then we'll just roll into the next one. And it completely obviates John's point. So,
Well, and to your point, the previous auditor we had for 20 years probably for the same rationale.
yeah.
So, and they were local, so it was, wasn't broke. So, but again, your point's well taken, so, okay.
Does the committee make a recommendation to
I
the
think we make
board?
a recommendation to the board.
That's what we're voting on here?
Yes.
So do I have a motion to recommend Crow to the board for our next 3 years of audit services?
So moved.
Michael,
Second.
Larry, all in favor? Aye?
Aye.
There you go.
Okay, thank you.
Quick bylaws question, Judge. Are officers of the board de facto members of all committees or no? Or is it just the chair?
Just the chair.
Okay. Thank you.
All right. That's a wrap.
Yes, sir.
Thank you.
What time I have? What's next?
Do you need a break? Or, I know I just arrived, so I don't know if anybody else.
We do have Mike on the line.
Let's just roll then. Okay.
Folks who were on,
Floor is yours, Mr. Dowd.
the folks that were on for the pension group, I guess if,
They're gonna drop off.
nothing else, I think we've concluded finance committee, so I guess, Keely, David, Peter, John, thank you very much, appreciate it.
Yep, thanks you guys.
Okay,
You all.
all right, thank you.
Who's Cowan? What? Cowan?
That was our human resources.
I stepped away for a couple of minutes. We ready to begin the business committee meeting then?
I think we're ready to roll if you are, sir.
Well, I'm ready to roll. Thank you. I'm happy to call the meeting of the business committee to order for our September 23rd meeting. Do we have any public comment?
We do not, sir.
Wonderful. Then let's proceed with 4 action items. Ryan's going to spend a lot of time on the table today. Pardon me, but the first item, the minutes of the August 26th meeting were distributed to all members electronically. Are there any additions or corrections to those minutes? Then hearing none, I'll ask for a motion to accept the minutes as distributed.
I'll make a motion.
This is Brian, so moved.
Thank you, Brian.
Seconded.
Second, excellent. Thank you very much. Then I'll call for a vote on that. All those in favor of accepting the minutes as distributed, please say aye.
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 Any opposed, using the like sign? I think one thing I forgot to do is ask Sylvette, do we have a quorum?
Yes, sir, we do. We do.
For the record, so thank you very much. Ryan, you're going to be on the table for 3 grant acceptances, so why don't you begin?
Sure, great. Thanks, Mike. Morning, everybody. So these 3 grants, we talked about them, I think, in previous committees, but they're basically the next round of the initial CARES that we got last year. This one is basically called the American Rescue Plan Act. It was signed into law March 11th this year. Similar to the other CARES grants, it's all allocated across airports across the country based on a preset formula. So we basically just apply for the money that they tell us we're entitled to. So the first one here is for ABE. Basically, it covers our operating personnel and debt service payments. This is the largest of the CARES COVID relief grants that we've gotten. This one is $5,987,974. Again, we're looking for approval to accept the grant application or accept the grant agreement when we receive it. At this point, talking to the FAA, it should be coming November of this year. But in terms of timing, it actually gives us a little bit more of a window, to Todd's point earlier, to spread out the 3 grants that we have, because they're 4-year expirations. So if we spread them out a little bit, it gives us more time to use them as applicable or as needed. So this one is, again, for the 1/15/2022. We'll do each of them separately, but they're basically all generally the same parameters. But this one's the $5,987,974.
And there's 0 local share.
Yep, yeah, 100%.
So we incur no obligation other than the appropriate way to apply the grant. Do you have
Correct.
any questions for Ryan? If there are none, then may we have a motion to accept the grant as described?
I'll make
So
a motion. Well, second.
Motion was, Tara as a second. Then indeed, all those in favor of receiving the grant as described by Ryan, please say aye.
Aye.
Any opposed? All right, Ryan, you're on to grant number 2.
Yeah, keep going. So this is the 1/16/2022. Again, same formula, components, 100% federally funded, but this one is just for concessions relief for here at ABE. So similar to a grant we received with the last round. Again, this one is more than what we got last time, $317,812, and that's based on market share and formulas that are governed within the grant requirements. So we'll work through that to get that funding out to the local concessionaires, which includes, car rental and everything else in the terminal. So really with that, looking for approval to accept that grant for $317,812.
All right, let's have a motion to accept the Concessions American Rescue Plan Act.
So moved.
Second?
Second.
Any other questions? Then all those in favor, please say aye.
Aye.
Any opposed using like sign? So Ryan, your last part of your presentation before the updates.
Yes, no, not a problem. I'll make this as easy as possible. Same thing, this is the relief designated just for Queen City, $59,000. I believe the first CARES we got was $33.25 or so. So again, more than the original, which we're good to see. Covers the same thing, operating expenses, debt service, and those components required or associated with Queen City. So again, the 2022 grant, looking for approval in the amount of $59,000 for the Queen City ARPA relief.
Again, do we have any questions?
Question. Did Braden not qualify for any?
Yeah, Braden's not federally eligible. Yeah, so that's why it's just those 2. Yep.
All right, then I'll have a motion to accept the Queen City grant.
I'll make a motion.
Is that a question or a second? All those in favor, please say yes.
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 Any opposed? All right, Ryan, let's move on to capital projects.
See you at the board meeting. Thank you.
Thank you.
All right, thank you, Mike.
Appreciate it. Thanks.
All right, so I have a few slides, some of our typical updates, but I wanted to highlight a little bit some of the work that was done this past weekend. I'm sure most of you saw a lot of Collins updates and progress throughout the weekend, but just wanted to hit some of the highlights. Some items that we didn't talk about, but just some other information that we were able to get. So couldn't have planned it better in terms of Mother Nature. Cooperated compared to the closure 2 years ago where we had torrential rain on the one day. So we actually were able to complete 4.5 hours early, which was good to get back up and running. Just some numbers just to kind of put things in perspective. So the 2 contractors basically put down about 6,500 tons of asphalt in the intersection. Basically that added about 4 inches of pavement. As a reminder, we'll talk about later with the closure this coming week, the final 3 inches of asphalt will be put on the intersection, basically bringing that total pavement thickness to about 17 inches of asphalt for, again, our larger aircraft and forecasted operations over the 20-year period, so we're not doing this again for quite some time. In the intersection, we also added 25-foot wide shoulders as required by the FAA specifications. And again, some of the other projects, we put about 1,500 tons of asphalt at the Gate 2 area, right outside the window here. The runway 24 and shoulder work within the glide slope critical area, as well as some of the terminal roadway reconstruction, as you've noticed, coming in, with the final paving of that to be completed next week during the 54-hour closure. We had 6 crews, 200-plus pieces of equipment, 250 or so contractors, about 20 of our folks and construction management staff on site, a lot of quality control testing with compaction levels and what needs to be approved by the FAA. So a lot of all hands on deck this weekend, but all in all, we got what we wanted to do done, which is good. Here's, again, just some photos. We'll get more next week, but it's a little hard to see in the middle one, but further down, you'll see some of the shoulder work that was added in the intersection. They did 2 lifts of asphalt, again, with that shoulder section on the 2-4 end. That will continue in future phases along the entire runway. Again, I mentioned Gate 2. It's an area that hasn't been touched in probably well over 20 years. There's some ponding issues right at the Gate 2, which is where United uses primarily. Some ponding issues, which creates issues, obviously, in the colder months. So rehabilitated that pavement and get proper drainage and action there. Again, mentioned the roadways. You can see up top in the different colors are all the areas that we're addressing or are addressing. Some of the areas are repaved to get that sub-base bed stronger than what it was before. But again, you can see kind of the quality we're dealing with to make sure come next week it'll be a lot smoother driving around the terminal roadway. Other thing we did during the closure, as you can see on the top left, similar to where in front of the customer service counter, we had that tile that they basically had to jackhammer out. So doing that when minimal traffic was here was key for that. So I took care of that. The next piece of that, when we get some of the equipment in, is for some of the walk-off matting in the vestibules themselves. But that's a minimal impact there. So that was just some of the highlights with the intersection closure. I know maintenance did some work out in the field, took advantage of one-ways being closed, some rubber removal, grass cutting in areas within the safety areas that didn't impact traffic. So took down some trees, some other things. So the whole kind of, again, all hands on deck areas that can take advantage of that timing. So moving on, again, hit some of these quickly since we just talked about the runway, but I know previous committee meetings we talked about maximizing the grant funds for the runway. So packages 1 and 2 actually include, I'll show you a picture in a minute, include a section we call midfield west of the runway that was included as an add alternate in package 4. So current contractor Morrissey is going to complete that portion of the pavement. As I mentioned, all of the current packages 1 through 4 complete all the rehabilitation on the runway. The future packages are the shoulders and taxiway connector pieces. So again, same thing. Later this year, finishing that midfield west section, which is basically this section right here. You'll see it on one of the other graphics as well. Again, package 3 and 4 was really the main focus during the intersection closure. You can see we had the one this past weekend we talked about, and then the next one upcoming September 28th, 12:01 a.m. through Thursday, September 30th at 6 a.m. So again, a total of 54 hours. We also have coordination calls with the airlines to confirm when their last departure will be prior to the closure and when their first arrival is, to make sure if there are any weather issues, we can make sure we're open on time or use windows as appropriate. Again, here's package 4. You can see the light blue area, what they did during the closure, and some of the other sections to continue as we progress throughout the end of the year. Again, where we already talked about before with some of the areas, this will be, a lot of this will actually be updated with the next newsletter, given everything that was done over the weekend. And then you can see kind of in that hatched area in the middle, that's that midfield section that was included in the existing existing grant funding that we have already in place. So a lot of moving parts with that, but the FAA again has been very helpful, letting us maximize the grant funds, but then also working with us to get some of the phasing done as needed. So moving on to the boarding bridge repairs, not much new here. They're looking to restart next week. Similar to a lot of other companies, they've been dealing with some staff shortages and getting folks that we need here on site. So we're looking to get that kicked back off next week. Moving on to some of the Queen City projects, not much new on this one. They're still looking likely October to do some of the final planting. We are still waiting on that final report to make sure that there are no new trees that could be obstruction in the future that we need to take care of. So, but you should be getting that later, not tomorrow, next week, what I was just told. Again, we talked about before, night approaches on 15 have officially been lifted, and then the survey is to make sure that it stays lifted with all the trees that were taken care of. 1533 design, we actually had a 60% design review meeting internal yesterday. Looking to get, kind of the drawing set by the end of the year to actually go out to bid early in the spring to be in line with our grant application. And again, just working with some of our folks internally, electricians, ops staff, and so forth to make sure we're covering everything we need to when we get to the construction component later next year. And moving on to Braden. So again, we're still pushing to get that officially kicked off, or groundbreaking, so to speak. What we're waiting on the final pieces now is just the final touching coordination components with the township. We have been talking with them about this project since about April of this year. But for those of you who don't know, I know there's been some transitions with the zoning officer and some of the other components to make sure that not to say the nuance, but the detail with this building is that a lot of the permitting was put in place when we did the fuel farm and included the terminal as the second phase. So it's kind of part of the initial discussions was resurrecting that permit to allow us to do what we need to do from the land development perspective. So again, just making sure everything is good to go. So hopefully contractor's ready. Again, the building's been fabricated, just working through those components. And then working closely with PennDOT, as part of the grant funding, getting them out virtually to do a pre-construction meeting so that all of the work elements that we're doing are grant eligible and we can get those reimbursed. So more to come on the specific timing. I know I'll work with Colin to get something out in the next couple of weeks once we officially get notice from the township, but that's been what we've been working on for that. And then the non-LNA funded projects, again, the Airport Road project, they are ahead of schedule. Looking to finish up, I think October, maybe early November. The next week, they should be doing some of the final paving at our entrance, but if you come by here every other week, you'll see they've been continually progressing through. And no major issues, just coordinating access as appropriate. And then as I always like to do, kind of the summary slide, again, no major variances or changes. Just really tracking some of those final runway packages. As we mentioned, I think last committee to get them knocked out by the end of the year. And then future updates to come based on where we're headed. And with that, if anyone has any questions.
Any questions for Ryan?
Two questions, or actually a statement of question. Great job managing things last weekend. That went very smoothly.
Good.
We lose a weekend. How much is that going to hit us in terms of passenger traffic?
Good question. I mean, we essentially, between the two closures in September, we'll lose about 104 departures between our passenger carrier and our air cargo carrier flights. So that's really, it's the extent of what's the load factor on those flights, which we never know in advance, kind of what that impact is going to be. But certainly we're losing some of the landing fees and parking revenue, obviously. So definite impact, I think we programmed probably a little bit more conservatively. We looked at those things, but I don't know that I can give us a real great number on how many people we end up losing in those windows.
I mean, they were reflected in our update, we pulled them back some. I mean, again, you know, one of the things that we do, we don't really talk about that much, but in our financials, we accrue, there is a settlement already built into our number, so that number could go lower if somehow on the airfield side, the terminal side, we don't get as much this for the whole year, so in theory, we could pull back there. It's really the main issue that would really hit us would be on the parking and some of that. That's the money that we can't get back. That's where it's a little bit more challenge, but it is built into the number. But it's probably about a third that we thought would be a good hit at this point.
Where will hit us is in the numbers that we present to the media with air traffic. I think that's from a PR standpoint, but that's easily accountable for.
And it'll be higher than last year.
That's right. So always look on the bright side, Todd.
There you go.
I think we should say congratulations to Ryan and the entire team for a job remarkably well done, to husband all those resources and get them done and get it in place.
Yeah, thanks, Mike, thanks, everybody. Yeah, it's definitely a team effort, for sure, a lot of folks.
Also to Colin for, I think, putting a remarkably good face on that and keeping the airport in front of the media. I think the coverage was remarkable, and the fact that we used it for other beneficial purposes for the airport, I think is significant. So to the entire team, thank you. And, if that's all, Ryan, let's put Darren on the hot seat for a while and talk about marketing.
Thanks, Mike. Want to pull that up? So Megan will handle a good bit of this, but just to kind of kick it off here, we're going to talk more this time about our advertising program, because we really haven't talked much about that in the last couple of updates. So I think Megan will give a quick update onto some of the marketing we have running, and then I think we're going to jump into more of our terminal advertising program. So I'll let Megan jump in here first on this first slide.
Hi, everyone.
Hi.
So since we last spoke back in May, in addition to the ABE branded ads we've been running, and this is just a glimpse at our digital specifically, we have implemented Spanish language ads as well as recruitment ads. So this is just a screenshot of some of the digital ads. It's not everything, but it'll just give you a good array of what we have running. On Facebook, I'm sorry, for the Spanish language ads, we're running those on Facebook and managed placements. And so for Facebook, those are only served to those who have their language set as Spanish within the 3 radii that we've previously discussed. And managed placements, that means we're running those through Google, but we're managing where they're specifically placed so that they only appear on Spanish language websites, again, within those 3 radii. And then for the recruitment ads, those are Facebook only right now within a 20-mile radius of ABE to a general audience. And we're also remarketing to those who have visited the career page of our website. So in those 2 areas, we're being very specific and targeted to who we're speaking to and how we're doing it. We didn't have, a whole lot of money in the budget to test these 2 things. So far, so good on what we've been doing, and we're happy with the results that we're seeing. And next time we meet, I think in January, we'll dive into this stuff a little bit more, again, with Wine and Hammer going through the dashboard as we've previously done.
All right, any questions on what's going on marketing-wise right now? All right, so like I said, we want to talk a little bit more about our advertising. And for those of you who weren't here back on the board in 2015, when Clear Channel was still managing our advertising, this is kind of some of the stuff we saw back then. I think it's beautiful and exciting advertising that we had. Honestly, we had way more fillers than we actually had advertisers at the time. It was really neglected for a while, to be honest. So we made that decision in the beginning of 2016, to bring this to an in-house program. Just again, because we tried to work with Clear Channel, we tried to engage some other potential concessionaires, and just really weren't able to find the right company to do this for us. So we brought it in-house. I mean, I think this looks a little better than what you saw back then. I think it's a little more engaging now, but we had some goals there. Basically, enhancing the customer experience obviously was always a big thing. We tried to do some of these more interactive things as opposed to just hanging signs on the walls and things like that. Improve community relationships. We had not a great relationship with a lot of these larger employers and things in the community we had nothing going on with LBHN, nothing going on with St. Luke's, a little bit with the Phantoms and Iron Pigs, but not as good, so just a lot of these bigger companies, so being able to get, kind of in the door with those folks and do some of this, and now we're doing other things even outside the advertising program with them, so that's really helped a lot. Obviously updating the advertising, adding digital, we had no digital advertising back then. That was one of the things that, one of the sort of sticking points we had, nobody was willing to make the investment in a digital network because they didn't see the return, so we've done that, we continue to add to that all the time, as we find new places for digital things. I think that will just continue to grow. And then the big one for Todd was, let's increase the revenue. So I think on that last slide, it showed 2015, we were about 107,000, something like that. And in 2021, we're projecting 329,000. So I would say it's been rather successful at this point in time. So I think Megan's going to talk just a little bit more about sort of what's coming up with the advertising, what we've done with it. But that was just sort of the overview of why we made that choice and kind of what's happened since then. So pretty happy with the way it's transitioned. And I think excited about things we can still do. Can't wait to have the new connector and things like that we're going to find all kinds of new opportunities in as well. So
Thanks, Darren. We surely look a lot better, that's for sure.
yeah, right now I think it's, as you walk through the terminal, it's a much different look out there. So
Absolutely.
Go ahead,
So
Megan.
over the last year, we've taken the opportunity to take the advertising program a little bit of a step further and actually brand the program. ABE Airport Terminal Advertising. So you'll see a really bright logo, and we also designed a dedicated website for the advertising program. So on that website, you'll find our media kit, photos of existing advertisements, new opportunities, statistics on airport advertising, details about our airport, all kinds of stuff that would go into a decision of you, deciding to advertise with us. In addition, we have all of the logos of our current advertisers on the website. They click through to their website, as well as advertiser testimonials. And so, Darren mentioned this already, just that community relationship. We're not just bringing advertisers in here and, putting them on the wall or putting an advertisement up for them and collecting their money. Like, we're building these relationships with them. Their advertisement is important to us and our passengers and in the community. So we're happy to be able to include them in more ways than just having them here in the terminal. The ad that you see here is something we designed to promote both the advertising program and the Fly Local program, which you guys heard about, to the local business community. So this is run in publications like Chamber Connections, Lehigh Valley Business, things like that. And Darren and I have begun discussing ways that we can further market the program next year when the budget allows to continue to grow the program. And so here's just a glance. Oh, sorry?
Quite a list.
So here's just a glance at all of our advertisers. You can see there's quite a variety of different types of businesses. Everything from small restaurants to manufacturing, news, healthcare, sports and leisure, kind of all over the board. So we're happy to be able to offer opportunities for small businesses who don't have a huge marketing budget, up to, the health networks and things like that who might have a larger marketing budget.
Any of you that want to get on this list, definitely let us know. So we're always looking for new advertisers.
Absolutely.
If there's any businesses like banks, things like that might want to advertise, we'd love to have them.
And so, as you can imagine, there was not much interest in the advertising program during the pandemic when there were no passengers here. But we have had a huge influx of new advertisers. It has completely flourished the last few months. We've added, this is just a glance at, things that we've already implemented. And on the right are logos for businesses who will be added over the next few weeks or months. Companies like Lehigh Valley Health Network and Pocono Raceway already have existing placements here that are rather large, and they are adding on to that. Lehigh Valley Health Network, for example, is doing something additional to their play area and their other advertisements to promote their executive health program. Our digital ads, Darren was talking about this before, so Mohegan Sun Pocono, City of Allentown is a new advertiser of ours. Bracy Construction, who you're all familiar with, is going to be actually doing a 3D model of the connector project in one of our display cases, so that should be interesting, which we're really excited to see. So all good things with the advertising program. We've been super busy and hope for it to continue to grow.
I think that's all we had, but certainly happy to answer any questions if anybody has anything.
Just one question. I saw last week or the week before the designation for Historic Bethlehem for the World Heritage Site.
Yep.
Have we reached out to them? That might be an opportunity.
I don't think we
That's a
have,
very large deal if that comes together.
Yeah, right. I know they're still a little ways away from getting that designation.
It's over a several year period.
Yeah, they've been doing this for a while now, I think, too. But
I
yeah,
actually did have a conversation with them a few months ago, so that's good to know, and I can definitely follow up with them.
Okay. Yeah, that involves both counties and Historic Bethlehem. That's a big deal for the region.
That's huge, yeah, if they get it.
Absolutely.
Is the,
Yeah, so let Darren and I know if you want to join.
is the in-terminal marketing program, is the in-terminal advertising program something that, as you look into the future, is there growth opportunity? I can see that you did 3x revenue over the course of 5 years. Presumably, there's not another 3x opportunity over the next 5 years, but are we able to grow that, or is that something that now that you've built something, could you put it back into the hands of an external, or do we have enough in, I just saw Todd's reaction, so the answer is no.
Yeah, I don't think, I mean, I would not want to put it back in the hands of an external. I think honestly, we were getting, I forget what the percentage actually was at that point in time, but it was less than 50% of the revenue that we were getting when it was with an external first off. I think that was the big thing. And when we RFP'd it, honestly, the RFPs were worse than that, so it wasn't, that wasn't going to improve.
Our experience with Clear Channel was really not a very good experience, that's for sure, and was a source of frustration for the authority for quite a few years.
Yeah, for sure. But I think to answer your other part of the question, can we still grow it? Yeah, there's still some room for growth. Can we, like you said, can we triple it again? Probably not. But I think, the interesting thing, and I think that's the place where Megan's done, and even Ashley before her have done a great job, is when we bring people in here, it's not, hey, here's the 3 options that we have to do it. It's, here's the whole terminal. What do you guys want to do? Like, we get someone come in and says, I want to take a gate. All right, fine, we'll decorate a gate.
Well, I think beyond the terminal. I mean,
Yeah, no,
as
right.
you know,
And we
my
are
background
doing-
was in outdoor advertising, and in Panama, one of our best, some of our best locations were right outside of the airport terminal, but prior to entering onto the private land. So we had an agreement with our airport there, and we have, these roadways and parking lots that are significant opportunities that it requires some upfront capital investment, and Todd loves those, but there are significant returns available to them as well.
Yeah, and we have put some money, we do always keep money in the capital program. I know Megan and I were working on that yesterday. We did put some money in there for the next year and even for the next several years to continue to look at those. And we've also looked at things like we do have some advertising over in the FBO, and we actually have a new advertiser starting over there. We've done a little bit down at Queen City, so we're constantly trying to find other places to do it. But like I said, obviously, again, the connector, I think, is going to open up a lot of theirs. As we look at the renderings, there's a couple great spots in there that I think we're going to be able to do something really cool with, so there's definitely growth opportunity. Like I said, I hope we can triple it, but I think that's probably unrealistic, but hey, who knows? We're going to keep trying.
Yeah, it's one of those things where once you develop the expertise in-house, it's earned, right? There's some cost over the years of developing that expertise and continuing to leverage what you learn.
Yeah, and it's been good too, because Megan's also part of a group of airports that have done this. This kind of right around the time we did it, like not long after several others started doing this, pulling it back in-house. A lot of, regional airports, things our size. So there's a group that Megan belongs to where they brainstorm and talk and, throw out ideas back, and solve problems together, which is also great. So we're not sort of going this alone all the time.
That was going to be one of my questions, whether or not we can, build partnerships, but at least establish some continuity with other programs to see what they're doing and how we can capitalize on their program.
Yeah, we've even talked, a little bit, and we haven't been able to put it together yet, but trying to work on even some more national campaigns and things where we'd be able to work with that entire group to get these, some of the larger national companies that would go in all these airports. That's a little bit, bigger lift, but it's something we're still working on. So hopefully someday we'll be able to hit on one of those as well.
And one of the things I liked about the presentation was both Darren and Megan talking about building relationships, because indeed that's where the key is going to be, and that's the benefit of being in-house. We have some folks who have that opportunity to build relationships and see their advertisers regularly. So that's a plus for us.
Yeah, I appreciate that, Mike. Yeah, that was important. I mean, again, going back to when we had it before, when we transitioned, we found a number of advertisers that didn't even know they were still here. You know, things like that. I mean, it was crazy. It really was,
Did they
you know.
stay then, or did they?
We actually kept a majority of them. There were a few that left, you know, whenever we transitioned, but we did keep the majority of them in here in some manner. So.
All right, do we have any other questions for the team? If not, then thank you. And do we have any new business to deal with?
Nothing new, Mike.
All right, then thank you all very much, and I have a motion to adjourn.
I'll make a motion.
Thank you.
Second.
All those in favor, please say yes.
Yes.
Anybody foolish enough to object? Then thank you all very much.
Thank you, Mike.
So,
Bye.
thanks, Mike. We're going to, because we do have, as part of the agenda of the executive committee, to do a solicitor evaluation, and the judge will lead for that, I'm going to ask that we move the ad hoc committee in the schedule, and that we do the ad hoc committee now, get the update with the potential benefit of the judge's assistance, and then we'll have the executive committee. So if you don't mind, we'll do the ad hoc committee now. We'll adjourn, and then we'll take a couple-minute break to give everybody a chance to stretch their legs, and then do the exec committee. Does that work? Right, and I think we do have a quorum for our ad hoc committee with me and John and Justin. So I don't think there's any public comment for that.
No, sir.
No. And the last time we met, because of the delay in the project, was June 24th. So I do need a motion to approve our meeting minutes from June 24th. Thank you, John.
Make that motion.
I'll give the motion to Justin and second to John. And all in favor, say aye.
Aye.
Any opposed? All right, minutes are approved. Ryan, you're going to walk us through the terminal project update?
Sir.
Awesome.
All right, good afternoon again, everybody. So, to Matt's point, it's been a while since we've talked, so quite a few updates and some other components we can talk through. But as of today, we're on day 77 of 730. Compared to when we met last, some of the major work items completed, obviously the fencing, the service road, putting in the trailers, kind of see some of the electrical duct bank up to the fence has been completed. Natural gas line has been fully relocated as well. In terms of some of the ongoing work items and upcoming as well, which we'll get to in the next slide, stormwater pipes about 75% complete at this point. Micropiles, as you see and heard earlier, right outside the window. 54, roughly 25% of the 215 have been completed. Just as a thing to note, I can't remember if we talked before now, I'm not about it, but some of the micropiles, again, just because of trying to get into the rock for, for the structural integrity of the building, some have gone down, 20, 30 feet, some have gone down about 120 feet. So quite the variance, and that's why we chose this method for the construction, given karst geology in the site, and some sinkholes that we run into that, again, we'll show some of the pictures here in a minute. What they're actually working on as well.
Stay on sinkholes for a second. Any significant concerns, given all the excavation that we're doing and the drilling that we're doing and all the rain that we've had, that creates an increased risk?
Do you have like a whole sinkhole slide later?
Not a whole slide. It did increase some of the risk. We actually did have one open up right out here, but as part of that as well, we're actually having our structural engineer review and the geotech review some of the areas that were exposed during the shutdown to confirm any adjustments they need to make or shoring up we need to do in the tunnel as part of it. But that's something we're obviously continuing to monitor.
Yep.
That's a great question. So right out here, kind of on the east side of the site, we actually had to move the side of fence a little bit in order to put in the wet tap for the water main installation. So we actually added that to the project based on when we did some of the research and started, looking at the pipe connections and where the valves were. To actually put in the new water main, it would affect this building, the main terminal, for about 5 days with no water. So that, given what we're doing and everything else, that really wasn't an option. So as we've been doing with other projects, putting in a wet tap, which there really is no service interruptions, there's no time to re-chlorinate that impacts, you know, the traveling public. So that'll be going on over the next week and a half or so. Service interruptions, again, that we're keeping an eye out for, waiting on some detail in terms of timing, but there will be some sanitary, you know, bathroom interruptions over in Wiley. Some of them we're going to do off hours. Others will be an old departure that might be a little longer, but again, making sure that the public still has facilities and are not impacted negatively throughout the construction. Again, continuing to monitor the impacts with noise and vibrations. Again, you heard some earlier this morning. Just keeping that in mind for folks, especially TSA, even in the tunnel and the public going through. And then there is some utility work that is happening within the tunnel, far end near the escalators, up in the ceiling, and we're doing that at night, again, to not impact the public coming through the space. So again, some of the look ahead we talked about earlier. So next month, we're looking to complete all of the utility installation, some of the items we talked about earlier. Again, final demolition of some of the site with curbs and sidewalks, nothing major there, but continuing the micropiles, that 4-month duration. And in the next couple of weeks, I think beginning of October, the last 3-week look ahead we saw yesterday, is once they get the micropiles far enough along, the team that's going to do the foundation work kind of comes behind them. So you'll basically see both micropile installation continuing while the foundation is coming on the original micropiles to finish those foundations. In terms of ordering the major long lead items, all of the major items have been ordered. The thing with all of these is even if they're ordered and in the queue, there's a lot of coordination that still happens in terms of reviewing shop drawings and design and so forth, but at least that process to meet the schedule has continued to move forward, which we're excited about.
So with the utility, everything's going smoothly with our communications with our utility providers. I know that in the past, that's been one of the hurdles is just collaboration with various different utilities. Everything's going well.
Yeah, the only major coordination we've had to do was with UGI and with the Water Authority, and they have been very well. Water Authority actually helped us through, again, the whole wet tap scenario and what we needed to do based on their input. So that's a good question. They have been very helpful in that regard.
And I'm personally struggling with a dishwasher in my house. I assume it's a different story for rooftop HVAC, but I know that supply chains across the world are significantly strained. Are we in danger of any significant interruption? It's nice to order stuff. It's nicer to actually take delivery.
Agreed.
Where do we stand?
No, but it's good you mentioned that because the rooftop unit really isn't needed for quite some time, but because of that, I know the team wanted to put it in, get the order started earlier so we're not running into those issues. But that's something that we continue to monitor based on the suppliers, the subs, and everything else. But no, that's a good question.
And anything that needs a microtrip, you're looking at delays out to 2022, even into 2023 potentially.
Yep. Yeah, it's definitely been an impact. So again, overall site, we have the time-lapse cameras up, and I think next month, once we get more footage of some of the main components complete, we'll start showing some of that in here as well, and working with Colin to put something on the website once we get that fully up and running. Again, you've seen some of the relocation of existing utilities talked about. Again, it's not a sinkhole slide, but there was one of the sinkholes that we were working through. I'm not sure exactly how big that one was, but again, continuing to monitor that component. Again, I mentioned relocating the side fence slightly for the water main relocation. Once that's done, they'll put the fence back to not impact the baggage exit lane as well as the employees crossing that area. Again, talked about micropiles. You can see, I think, similar we dealt with Hangar 11. It's not the cleanest job to do, but these guys do a great job continuing to move forward. And as you can see, even during the design, the far right, why we chose the micropiles. You can see how close it is to the existing building. That wouldn't be possible with some of the other installations. So again, as we looked at.
Pictures for a second. People love drone shots or elevator shots. That may be something we can work into marketing as we're building this out. Either if somebody's got a drone, we can do it that way, or we can, when Ted's over this way, just have them do a quick 30 or 45-second video clip and roll them out periodically. People like that. They like that, I think, better than the still shots.
Still shots, yeah. That's a good idea. Okay, I'll keep that in mind. That's a good idea. And again, some of the phasing we looked at before, crossing off some of the other items, but we talked about working on the utilities, micropiles and foundations, and then continuing with the other areas. And again, talking about the underground tunnel, making sure any improvements that need to be done are incorporated with the waterproofing, so we're not finishing the space and, again, dealing with water infiltration.
And the projected complete date of phase 1 is?
We'll get to it later.
Okay, you're gonna hold it till later.
Yeah. That's a good point. Again, phase 2 or 3, once that first one's complete, it's obviously working on the main components of the connector, preparing for the TSA equipment installation, again, installing the escalators and elevators. One thing I will add is we did have our kind of 4-month meeting with TSA last week, the week before. We're still in the queue for November timeframe, and we were talking a lot about that. They're still pushing forward, and we're working with them on what their metrics are for calculating the requirements for the new equipment, because like we mentioned before, they're actually coming out with a generation ahead of the latest one for 2022, so we're trying to get on that list in terms of throughput. The numbers that they're putting out there in terms of passengers per hour are depending on the metrics, are pretty high. So the old system was about 150 passengers an hour. Some of the newer ones are 180 up to 220 an hour. So that obviously helps depending on how many lanes we have during our peak time. So continuing that discussion, but just so the group's aware, we're still on track with those, with working with TSA.
Would we be one of the early installations of that system across the country?
Potentially.
And is that a potential PR item?
Possibly. I know there's a lot of question mark on TSA's part, but there is a chance that we can see the new equipment.
And again, just to reiterate, phase 3, once the checkpoint's been commissioned, decommission the old equipment, put in the security exit portal, renovate the tunnel. At that point, we'll be using the new space, which has obviously been the main goal of the project. Again, not much has changed on the funding side. Still waiting to hear on RACB, which apparently is any day, but it keeps changing based on what Colin's hearing. So we'll wait to hear on that. To your point, Matt, we're basically looking at the main part of phase 1 being done around July of next year, and then again, still shooting for that TSA equipment delivery in November of 22. The other piece I forgot to mention with TSA was actually confirming with them what they need in the space in order to bring in the equipment, install, do the training, and other things, so that we can continue to work either around them or to make sure we're not getting the space ready and then sitting for 30 days kind of thing. So we're working with them on coordinating that to help make up some time or gain time in the schedule. I believe that was the last slide. If anyone has any questions. So more to come, obviously, but we're happy to be back moving forward and continue updates as we go.
Thanks, Ryan. And I do appreciate, I know that we have, I think it's going to be valuable over the long term, over the term of this project, to have this separate committee set aside for this discussion. This is going to be the major project that we do for probably one of the most significant projects that some of us work on with regards to this airport. So thanks to everyone for accommodating this set aside of time. Justin, did you have any questions for Ryan related to the presentation?
No, not today. I'm glad we're back moving forward. It's a good thing.
Absolutely, yeah. Excellent. If there's no new business for this committee, I'd ask for a motion to adjourn.
I'll make that motion.
Thank you. we are then adjourned, and I think it's probably worth taking 5 minutes. Everybody's been sitting here for a couple hours. Take 5 minutes, and then we'll get started with for August 22nd, please say aye.
Aye.
Any opposed?
Aye.
Thank you. We also have our Florio Perucci invoice ahead of us for August 2021. Please take a motion to approve that invoice.
I'll make a motion.
Thank you, Tara. Second for John. All in favor of approving the invoice as presented, please say aye.
Aye.
Any opposed? Okay, that is approved. We've been doing we had a really nice update from Connie last month on some portion of the airport that we don't always get a look at, and we're gonna keep that ball rolling. We're gonna ask Colin to give us an update on our legislative outreach. So, Colin, you may take
Take the stand.
the red circle.
That's fine. Well, good morning, everybody. Again, typically, I don't get up here and speak. I think the last time was to talk about our public relations efforts, which certainly falls under myself. I also do community engagement. And then there's the government affairs or legislative affairs, which I've been doing for the last couple of years. So what I want to do today was kind of give you an update on some of the things that we've done, our approach, some of the items that are on the radar. And when I say on the radar, I mean these are legislative discussions that are going on in Harrisburg. There's no definitive answer to a lot of these, as we know from RACP. This can speed up and slow down pretty fast. And again, the communication as well with some of our stakeholders that are here at the airport. So one of the interesting discussions I had initially when I started doing legislative affairs is when you go into a political office, they say usually we hear the knock on the door when you want some money. You go in there, you ask for the money, you get it, and then you never hear from them again. That's not what we do here. Well, what's important to us is what Mike alluded to when he talked to, when Darren was talking about advertising and marketing, which is the relationship and the engagement. And the engagement with our federal, state, and local officials is ongoing. It is not a situation in which we have a project going on and we're looking for some funding and we're going to go in there and we're going to try to request some of that funding and then they don't hear from us again. So from the federal side, U.S. Congresswoman Susan Wild has been here a couple of times. Most recently in July, Senator Casey came in earlier this month, I think September the 2nd. Important. Why? Because what's going on in Washington right now is all about infrastructure. It's the infrastructure bill. We wanted them to understand what the terminal connector project was. In addition to that, we also wanted them to look around at some of the funding they've helped us secure. So Congresswoman Wild and Senator Casey helped us with the runway funding to get the $8 million for a phase of that. So the discussion with them, they want to see. They want to be here, they want to talk to you, and they want to understand what we're using the funds for and be able to see it in action. Senator Casey had a presentation from Ryan Meyer going over the runway 624 project as a whole. We took him downstairs to show him the checkpoint. Again, he hadn't been here in a while. Now, family flies out of here from time to time, but just a refresher. So the invitation to bring our federal officials in is always out there. We work with their district offices, and these were two opportunities to have them come out at really an important time for us as we continue to talk about infrastructure. From the state side, you can take a look at all of these pictures here, and it's represented by all sides, and we'll get to the local side as well. As you see County Executive Armstrong and County Executive McClure. But Senator Boscola was here for the Hangar 11 groundbreaking. Senator Brown, as well as Representative McNeil, were here for the opening of that, and of course Senator Brown here for the ribbon cutting of the Allegiant Crew Base. And this runs across. This is not just these individuals. Throughout this year, we've had a lot of discussions with all of our legislators in the region. I bet you can call their offices and speak to them and say, oh yeah, we've heard about this terminal connector project, because that's our focus right now. And we've updated them on other things that are going on. But later, probably in a couple weeks, middle of the month, the director of PennDOT's Bureau of Aviation, Anthony McCluskey, is coming to the airport. Why is that important? Because we just talked to PennDOT about funding, about projects that are going on. And you're having the director come in right now. Now, he came for the groundbreaking of Hangar 11, but never got to see it because of COVID and because of travel. So he wants to come see Hangar 11. He also wants to see the terminal connector project. If you remember, $1.8 million of funding from the PennDOT Bureau of Aviation was brought to the airport over the summer. So it's important, again, to invite them and engage them as we go through a lot of different things here at the airport. Aviation Advocacy Day. Now, this has taken a lot of different shapes and forms over the years. This picture is actually from several years ago when we had gone down as a group, many of the directors, and Darren was with us as we went down to talk to our legislators. And it was an opportunity for the Aviation Council of Pennsylvania to get all these airports and airport operators and representatives to go around and have an agenda and speak to your legislators about some of the things, the priorities within aviation that you want to see, that you're hoping to get their support on. So they've done that in the past. We've also gone down individually. And again, that's a proactive approach to make sure that, first of all, the regional leadership knows what's going on at Allentown and Lehigh Valley International Airport, as well as leaders and chairmen of committees. Having an opportunity to talk to Senator Langer-Holtz, who's the Senate Transportation Committee chairman. Had an opportunity to do that, speak to his office in order to, again, put things out there, shine a spotlight on some of the issues we see and some of the projects and infrastructure issues that we have as an aviation system. And you'll talk to any airport, and I think Tom would say this, and I think Todd would say this, and Ryan would say this, there's never enough money. There's just never enough money for aviation. And we continue as a group to work together, bring everybody together, because that's the way it's going to get done, to engage some of our leaders here at the state level in order to try to increase that. So when you talked about the PennDOT Bureau of Aviation and that allocation that we got, the $1.8 million, they only have $10 million to give out each year. So we were able to get 1.8 of that 10 million, which was important for this project. Back during the Hangar 11, getting funding for Hangar 11, I believe it was 6 million at one point and almost up to 8 million we got from the Bureau of Aviation. So that's a lot. Take 8 out of 10 million, that's a lot of money to come to the airport. So Aviation Advocacy Day continues in a lot of different forms, whether it's as a group or we go as an airport to discuss things with our leadership. Our local engagement, we do a state of the airport system address, really. Every year we do it in the fall, November timeframe. We go before the county commissioners as well as the county council. I know Tara Zorinsky's been there and seen these presentations just to talk about not just ABE, there's Queen City and there's Brayton. So each county wants to know the enhancements and the different projects and some of the great goals and things we have going on at those airports. So we go and we speak to them, and we'll be doing that again this fall, whether virtually or in person. But even these events, this was several years ago when we brought the two businesses down to Brayton Air Park, and it was important for Northampton County. I believe it was $250,000 that the county supplied and supported the airport with. Executive McClure joined us down there. It was a proud moment because he wanted the air park to not just be about general aviation pilots. He wanted business down there. He wants community engagement. So it was great to have him down there. And then County Executive Armstrong loves to get out at the airport, loves to be involved in different events, but also he does a Facebook Live. And he's always looking for subject matter, and the airport's near and dear to his heart. So being able to come out here and talk about our terminal connector was something that he was excited to do. So Tom was gracious enough to talk to the county executive. On the radar, so here are some of the things that are out there permeating amongst the aviation group. The Airport Land Development Zone, and really it's a program to incentivize the development of vacant land and buildings owned by airports leased to private businesses. It's job creation. That's what they want. And they want to do a $2,100 tax credit per net new job created for a maximum of 10 years. Now, currently still being discussed in Harrisburg. It was going to be for just commercial use airports, but in order to get some support from different parts of the state, you need to have more than just commercial use airports. You need to have some of the public use airports involved as well. So there's language being worked around. So where this is right now is we believe that a draft is going to go for the Senate, who's going to kick it over to the House sometime soon in the next few weeks and months. So there's been some progress there. Certainly something we would be encouraged to see as an airport, something like this Airport Land Development Zone, to come to fruition. Hangar development, always discussion. I know Mr. Dames is on the line. And we had a discussion with, I believe it was Representative Mackenzie Tom a couple of years ago about this. And it comes down to that fire suppression system that when you look at T-hangers and you look at hangars and the expense of building, that really shoots it up. So getting before our legislators and talking about reducing the square footage, bringing it down. We know that the Aviation Advisory Committee, which speaks to the governor and different state legislators, also supports this, and they're pushing this agenda. This is one of their high priorities, to encourage hangar development. As part of that, they wanted to secure more money, obviously an additional budget for hangars and increased construction grant funding, secure financing levels. There are a lot of items that go into hangar development, and I believe that the Aviation Advisory Committee is hitting them all as they try to move this forward. I mentioned the infrastructure bill at the federal level. And the bill contains $25 billion in new general funds over the next 5 years for airports. Now, the interesting one, and I bolded it here, is you've got your $15 billion, you've got another $5 billion, but this $5 billion for new airport terminal redevelopment could be an opportunity. Could be, and going forward, could be another, because Todd knows he'll breathe for about 30 seconds and someone else will be knocking on his door for something else to do. So what we want is we want to identify places that we can get funding, and this is something new. This is going to be a competitive approach. This is going to be about projects. This is not, you have the AIP, which is something that, is more formula related, and we're in that unique position. You got runway 624, which is a heavy lift and a lot of funding going that way, and you have this project here. So this might be another avenue for us to go after. So we're keeping an eye on that. I did have a conversation with Congresswoman Wild's office, and they're still on track to try to vote on this on Monday in regards to getting it, through the House, married together with the reconciliation piece of it. So we'll see what happens over the next few days, and just keep an eye on it. But this is important to know that this is in there, and our aviation industry has been pushing that. The other one is this TROC, the Transportation Revenue Options Commission, which was formulated by Executive Action in March of 2021, and they've just published their findings. You can see who was part of this group. Now, a couple of concerns that by the recommendation of the commission were an aircraft registration fee of $50 and a jet fuel tax increase from 1.5 cents to 4 cents. Very early in the discussion, they're just trying to funding and budget shortfalls, trying to find ways to get more revenue into the state. So more to come on this. I just want to make people aware of this, that this is out there and they are discussing it. We work with our stakeholders, our Transportation Security Administration. Obviously, the mask mandate's been extended. Real ID has been moved, kicked down the road, and they've spent a lot of time. That is the Transportation Security Administration. That's Mike Kickline from TSA, out there trying to alert people, educate people. They did see an increase. I think they felt like they were making progress. I think the state felt like they were making progress, and then we kicked it down the road. So again, that'll ramp up. Going forward with Real ID. Travel tips for passengers. I bring this up because if you remember a few years ago, you got an odd approach from me every other day about a firearm at the checkpoint. This is Lisa Farnstein, who is the counterpart to me at the TSA, and she came recently to talk about people traveling with liquids because they were having problems again as people got to traveling again, what was allowed in carry-on bag. We had her come when we reached that issue with the firearms to talk about how to properly travel with a firearm. So there's that engagement of bringing the TSA in, and it gets media coverage, because when the TSA comes and speaks, especially about something that the media loves to write about, no matter what the circumstances is, they'll bring certainly attention to something that we want attention to as well. So we continue to work with the TSA.
Do people truly just forget they got a Glock in their backpack?
I'll be completely honest with you.
I'm a gun owner, and I know exactly where every gun I have is right now.
Here's the issue. I mean, I have two brothers that are in law enforcement, and anytime they read this, they just can't believe that somebody actually forgot. It's actually. There was a recent one was an individual that was having a very hectic day and had to make a bank deposit, large, and did that, was late getting through and just forgot. There are those that forget, and we try to remind them that As you come through the doors here and you go down that escalator for now until it comes upstairs and you get to that line that says TSA checkpoint, that's federal land. Once you cross that line, there's nothing the media was confused. They had written a story and said, they didn't say that the person was immediately arrested. You are immediately arrested. There's no, let me explain, because you're shutting down the checkpoint. As soon as they see that firearm, they're shutting down the checkpoint, and that is an immediate arrest. So that's a disorderly conduct charge, is not, but there was one that was carrying it for protection and didn't have a license. It was his father's, and his father knew. And yeah, it's nefarious. No, it's not. It's most of the time someone just forgets, and that's. I believe there was a story not too long about Mickey at the checkpoint, and Mickey caught a scent.
Our K-9.
Our K-9 unit caught a scent, and the person, there was no firearm. The person had used the bag for his shooting purposes, and the dog picked up on that at the checkpoint.
Yeah.
So just a tremendous, but yes, most of the time, and they just need to be educated and told again, there's a process to this. And there's a confusion of, well, I have a permit to carry. That's all well and good, but that doesn't matter to the people wearing the blue shirts downstairs. That's not gonna happen, so.
Put up a sign, did you forget about the Glock in
Yeah,
your
I
bag?
mean, listen,
Turn around.
we can have a lot of fun with different signs and how we want to do it, but that's why I always have the on-the-record conversation with the media and then the off-the-record conversation with them. And the last thing I wanted to bring up with is, and we did this a lot during the pandemic, and I know you guys are familiar with this, the odd approach, is, throughout the pandemic, for our situation reports, which reached into the 60s, I believe, the number of situation reports we sent out, these were also included to our legislative partners at the federal, state, and local level to keep them informed, to let them know what was going on at the airport, how aviation was being affected by COVID-19. So again, my point to everything is the communication line and the continuous communication line needs to continue to happen. That's the approach here, and hopefully as we move forward, we'll continue to build those strong relationships. I think we have them in the region, and we're just going to continue to build on them. Anybody have any questions?
On the airport land development zone?
Yes.
That's something that we work in collaboration with our other airports around Pennsylvania.
Yes.
And then who would be the authorizing entity to allow for something like that to occur? Like, is there, that's, the development zone legislation is just kind of something that the legislators are aware of, but not necessarily.
We have some great support within the region. So I know there are several senators and representatives in our regions that have signed on for this legislation.
Yeah.
In order to again push this down the line, and they continue to discuss.
Yeah.
Because one of the challenges, and as I mentioned to you, was creating that support in both the House and the Senate.
Yeah.
And what you initially had was if you only focus on commercial service airports, it limits the pot and the pool.
Mm-hmm.
And to gain that extra push across the finish line, opening it up to a few. Now again, how many people have? I mean, the question is how many people have land to really develop?
Sure.
Throughout the region. So that's going to be the big stick. That's been the big sticking point, and then it'll continue to to work its way through. But I think there's some good momentum with this. I think it was Senator Scavello and Senator Brown and some of the Senator Boscola. I mean, they see the value in it. So I think it's gained momentum, and you hope that the next little bit of time when it kicks its way over the House, it'll get its way through.
And then nothing makes it into a federal bill without somebody pushing it into a federal bill. The $5 billion that is there for terminal redevelopment, presumably there are aging terminals across the country that have weighed in. What is the realistic, I mean, if you're talking about redevelopment, does that apply to something like our connector project, or is that more along the lines of redevelopment of the old terminal for potential commercial use?
There's really, in terms of any of the, what we've seen at this point, it's too early to know what might be included or what might be considered as they work through that. I think redevelopment could include some potential new construction. The question is to what degree, and if we're incorporating certain measures into the space, does that also, there are elements of that construction that would qualify versus the entire project. So it's a great question, and we don't have a lot of clarity just yet in terms of what may or may not be included.
Gotcha.
Yeah, because it's interesting, because even when we've been on calls with different industry groups across the country, when they were figuring out how they were even going to do this with funding, it was, are you gonna, you're gonna earmark it here, how, there are no earmarks, but you can find projects here, line item and things of that nature. And it basically came to, like, you're gonna have highways and bridges and roads, we're gonna dump a big amount of money into the aviation, to the AIP, in order for it to be kind of disseminated. But the interesting part to that is you see a lot of airports across the country that have, even Philly, looking to, expand and, more, gates or more terminals. And it's there's just a lot of places across the, the country, and as you mentioned, airports wise, where it's gonna have to be clearly defined, because I think, while redevelopment is the word, they may have to balloon it out because of just projects that are being talked about by other airports.
Got three. First off, I think we ought to make this a regular occurrence at exec, whether it's once a quarter and then as needed or something of that nature. But there's a lot of information here that I think we need to know as board members. Number two, one thing I'd really like to do is get as much lead time for things as we can. So for example, when Bob Casey was here, I would have loved to have come out for that, but I couldn't, so I didn't get enough lead time to get it on my calendar. For the county presentations in November, if we pick dates, let us know ahead of time, so that as much ahead of time as we can, so that we can be there to support the presentation. I think that's important, because there's a lot on this board that can help in terms of moving things, that can help in terms of how we come across to the community. Take advantage of us.
And I know that Casey was worked a little bit, but it was a late up, because I know they had a previous event that I was talking about. I think, Matt, you had mentioned there was another event that was on his radar.
Yep.
And we were a little bit in flux because of the flooding.
Mm-hmm.
So I talked to Connor throughout the week and was a little concerned that we were going to be maybe a bypass, because he had mentioned that the senator had talked about going down. That was with 76, and I'm going to go down to that region. So it was a little, But yeah, absolutely. If it's we try to. I mean, again, and again, it's one of those things where it's so hard with them, because when they come to the region, you never know. I've been asking Connor for a couple months now with the infrastructure, the connector.
Yep.
And Senator Casey's been in the region, but this was an opportunity here, and I was crossing my fingers that obviously a larger story down the Philadelphia area that take precedence. But he was able to come. But yeah, absolutely.
Susan Wild typically schedules out pretty far. I've got her coming into New Tripoli Bank for a bank conference in about a week, and I had to book that about a month and a half ahead of time. So yeah, she requires a little bit more. But then what was the third one? Calendar. This type of presentation. Oh, Pat Toomey.
Yes.
We got him over here lately, and he's in office for another 15 months yet.
15 months. We've reached out to Senator Toomey's office. We speak to Senator Toomey's office quite frequently.
You talked to Marty?
Yes, we talked to Marta, and we also talked to Wes Wright,
Okay.
Who's part of his office as well. And we've talked a lot about the connector project.
I would imagine we've got his support, so we're not looking to get his support. It's more just the visibility aspect.
And that's what we're pushing for. So we got 2 out of the 3, and the last one we're pushing for.
Okay. Okay, thank you.
Yep.
Matt, this is Brian with a real quick comment.
Yes, go for it.
Colin, thanks for the update. I just wanted to emphasize 2 points that you mentioned very, very quickly. One, the hangar fire suppression is a solution that is worse than the problem. Our jet, one of our planes was in maintenance, and the fire suppression system went off. There was no fire at all. The hangar was filled with 25 feet of foam. The entire cockpit, the entire inside of the airplane, because it was open for maintenance, was filled. Every computer screen, every panel, everything was infiltrated, and it took over 3 months for that to all be remediated. And so I have a very bad opinion of fire suppression systems that go off when there is no fire. And I have learned in the industry that this happens a lot, and there's no fire.
I can use that recording, right? When I talk to legislators, I'll just use the recording of what you just said.
I'd be happy to. Definitely, the solution is a disaster, and the problem is minimal.
Yep.
And then just a quick echo of what you said about building hangars. I appreciate that you mentioned that. I always say here when we take a strong look at repairing and rebuilding our hangars. Thanks, Matt. Thanks, Colin.
Thanks, Brian. Karen?
I was just wondering how much land is left to develop that the airport owns?
Well, I mean, we still have 308 acres that we just recently approved. There's also some other non-aero land or other airport land that we have around ABE, but this would apply to not just ABE. The proposed bill would also include Queen City or Brayton Air Park, so our other airports as well. And so any type of proposed development, and all we're looking at is acreages in that bill that would cap the amount of acreage that it could affect.
So this could help with the development of the business park with Majestic.
It could.
Yeah.
It could.
It also applies to aeronautical too, right? It's not just non-aero, correct? That we could do this.
Correct. Any sort of development.
As well, you know, so.
Yeah, I think everybody, when you hear the word development, gets on high alert because we have so much development in the area already and so much pressure on the roadways and.
Well, and that's where we have an opportunity to, I think that as good a job as Colin did with the Majestic deal with the morning call, we have an opportunity as people who are representing the airport to clear up for our public that we're not talking about necessarily industrial development. This is business to park development, more on the lines of the potential for office space, there's potential for light assembly. We're not talking, this is not necessarily a Dutch Springs situation.
Warehouse or
Right.
logistics center.
Exactly.
Because I think people are concerned about that when you talk about the airport and development because they see all the cargo flights and the idea of it like FedEx expanding or Amazon expanding. And I know people have varied opinions on this because some people think that kind of development is better because you don't have like the heads per capita to provide services for, and it should provide like more taxes and things like that, but it doesn't always. So I guess when we're talking about land development, there are also people who would rather have it be developed closer to the airport and not in their municipality. So I think there's a lot of room for us to talk about this and frame that in a more positive light as well.
Certainly.
And just be cautious about what the choices are that we make in terms of development.
Absolutely.
No, agreed.
Colin, I had one other quick question for you related to our outreach and how much we work with partners like Lehigh Valley Planning Commission, Lehigh Valley Economic Development Corporation, when we're approaching, if you're approaching legislators about infrastructure funding, we have natural partners here. Are we actively collaborating with those folks?
We did, and we've done that, and we can do more depending on the project and what we're looking to do. I know when we were talking about, if we just take RACP funding in regards to our project here, the letters of support and the backing of the Lehigh Valley Planning Commission and the LVEDC and the Greater Lehigh Valley Chamber of Commerce, it's important for all of us, especially when it comes to certain matters. And to your point, when it comes to larger projects, if we're looking for funding, if we're looking for support, if we're looking to get this out there, I share things with Colin over at LVEDC, via email to make sure he stays engaged and let them decide, what role they would like to play. So yeah, I think we should do more of it. And I think, going forward, as we hit, as Tara had mentioned, the development piece and we start to drive the narrative, because let's be honest, for a while, this big thing out here is what the airport, everybody's gonna be looking for, especially when we saw what happened this summer with, there's gonna be other narratives that we can drive. I know Ryan's master plan, the master plan is done, and we're gonna push that narrative out there, and then we can talk about development, getting people to understand. And the media is no short, and definitely the groups that Matt mentioned, is always looking for ways to do that. So we're willing partners to do that.
Awesome.
Colin, Larry Hemberger. Just a quick
Right.
question on the hangars. The hangars on all three fields have been discussed for many, many years. We've made some progress there.
Where do we stand now? Or are we shovel ready with anything, or is it, if they build it, they will come, or do we have people waiting in the wings to fill up what we have available right now?
I think Darren give a little over, because Queen City, I think there's no room at the inn right
I mean,
now.
our hangars are, for the most part, full. We're still, hangar 11 still has some capacity in it here, but for the most part, yeah, our hangars are full. As far as shovel ready, I don't know. I mean, that's a Ryan question more so, I think, for the.
You guys are playing hot potato. Where's it gonna?
What's that?
Yeah, well, I
You're
think,
playing hot
just in
potato.
terms of talking, and I know we've had conversations at the state level for hangar funding and how we've tried over the last several years to sort of break up or phase some of that work. So Ryan, I don't know if you want to just kind of update us.
Sure, yeah, Larry, to that point, as Tom just mentioned, so we've continuing to having conversations with the state regarding potential funding for hangar development, phasing the site work from the building components, and to Colin's point, those funding mechanisms come from the same bucket in terms of the capital budget, that 10 million annually. So it's working with them to make sure that we're continuing to apply. We applied last year. I think actually the next month or two we'll apply again based on those breakouts. So continuing to make that push, especially for Queen City and Braden for those pieces.
And Larry, to Ryan's point, I mean, that's why having a meeting with Director McCluskey coming up in the next few weeks is important as we begin to apply and we begin to, again, push for hangar funding that he's able to see. Again, they helped with the hangar 11 piece of it, but we have two other, airports in our system that are looking for that as well. So updating him on that and obviously updating him on the Braden Airpark terminal project as well, because we did receive some funding for them for that as well. So it's good that we have this meeting coming up soon.
Thank you.
Great, thank you, appreciate that. I think John is right. Just generally, these updates are awesome. Like getting Connie's update last month was fantastic, and hearing from Colin on this stuff. Whoever is next, I'm looking forward to it. It helps us understand, and I think it helps the public understand the airport operations in a way that really helps us with decision making and helps us with the way that we go about operating here. So appreciate it. Thanks to you, Tom, for putting that together with your team. I don't think we have any need for an executive session today. That's correct. No need. So, Judge Freeberg, appreciate your attendance. We're going to move on.
Depart so you can discuss the evaluation.
Yeah. I don't know how I'd categorize it, John, but if that's how you want to go.
Good afternoon, Judge.
See you all on Tuesday.
Yes.
Thank you.
Thank you, Judge.
Tom Cruise, Demi Moore movie. Lieutenant, go out and have a cup of coffee. I don't want a cup of coffee. Lieutenant, go out so we can talk about you behind your back.
Was it the Jack Nicholson, Few Good Men?
Yeah.
A classic.
Yeah.
Do we have the solicitor evaluation form?
Online, yes.
Of it? Yeah, if you want to pull it up, I think it'd be great. And the judge did ask that, the judge's recommendation is that the solicitor evaluation occur in public session. So we'll stay live here for the benefit of the public, but I'd remind everybody that although the judge has left the room, the public is still in the room, so.
Correct.
So whatever you want to say about Demi Moore, you might get it off your chest now.
Done.
Yeah. Excellent. So I think probably the best way to approach this is just run down these lists of questions. I know, Brian, you had some thoughts, and I'm going to be turning to you. You were also excellent in working on Tom Stout's evaluation. And maybe we could, at risk of just reading off of a Word doc here, I think we can read through these, and then I'd ask for everybody's kind of comments, and maybe we can arrive on a score together, and we'll let Sylvette complete that and provide it for the file. But obviously, the most important role of our solicitor is I would say, to provide us with legal advice. So what it states here is that the question about the ability of the solicitor to provide technically sound and accurate advice with an understanding of the legal and regulatory issues affecting the airport authority, an understanding of the industry, and an ability to proactively identify and manage risk and issues. The question before us is whether our solicitor provides clear and easy access to information and advice, provides complete advice including options, and proactively provides relevant information related to proposed legislation or new case law. So I have a more regular occasion to engage with Judge Friedberg, and we are evaluating Judge Friedberg more so than simply the firm of Florio Perucci, correct?
Yeah, I mean, we select Florio Perucci as our solicitor firm. They obviously have had some different representatives here for us over the years.
Yeah.
Yes, I really look at it as both, because that's part of the comments that I'll make in a little bit.
Yeah, and so for what it's worth for me, I think that we have, this one is kind of an open question. There have been times, and now, we as an authority have, in special instances, needed to engage additional counsel for a particular issue. So we engaged Kaplan Kirsch for work related to the development of Majestic. We've engaged other firms for especially.
Talked to our pension counsel this morning.
Correct.
We have bond counsel. We have some firms we're using for labor counsel as well. So yeah, there's a number of specialty uses there.
But we have also at times felt like the technically sound and accurate, this first threshold is sometimes not met. There are times where what we're getting, we feel like is not exactly sound or accurate, or we're left with doubts. And we have pursued second opinions, if I can put it that way.
That goes to the question or one of the questions I have, which is Florio Perucci the right firm for an airport authority?
Correct.
That to me is core, because we really have two lines of business. We've got real estate development and we've got airport. So they're two very distinct businesses. But our primary is the airport. So, and I've always had that nagging thought, because to me, having to go to Kaplan Kirsch, who frankly I wasn't crazy about anyway, but having to go to them for what I would consider to be airport business, to me never made sense. That type of knowledge should be core to whoever our solicitor is, in my opinion. So, and now I will say, I don't know enough about the Florio Perucci firm to say whether they've got that knowledge within the firm and the judge taps into it or not. So that's an open question for me. But that to me has always been a question mark as to why we wouldn't have a firm with more airport expertise as our primary legal advisor. Now, I do know also we always try to keep things local.
Correct.
I'm a big.
And you're an advocate for that.
Yeah. I'm local, my entire bank. Sometimes you can't.
Correct. Yeah, and I think it's a good point. I think when I think of legal advice as an airport, certainly I think a lot of what we face are federal issues, and so that local presence or that individual knowledge and what's happening locally is probably not as relevant, because we're looking at nationally sort of what trends are going on and what things we're worried about from a FAA or TSA perspective. I think the other part to that, though, is really understanding what's happening as a municipal authority in the state of Pennsylvania. And, whether we're an airport authority or another type of authority, there's some nuances for sure about being a municipal authority in this state that even a Kaplan Kirsch or another national sort of aviation specialty firm isn't going to have.
And that's the point that I wrote down, is there's this question about the legal advice that we get as an airport operation versus the legal advice that we get as an authority. And so while you were bringing it up into land development and airport ops, there is also this larger idea that whatever our activities, our legal form is that of an authority. And that may necessitate a different discussion about what type of legal advice we get. All that said, there is still some question about some of these other things. We select a solicitor to provide us with general guidance, and that general guidance has come up against limitations in most of the instances that we've had to get legal advice. And so that's where I come up with when we have gotten guidance from Judge Friedberg, there have been questions about the legal soundness of that guidance, whether it's related to, and this is where there is some like discomfort with doing this publicly, because some of the specifics related to the legal advice are legal questions that we tackled in executive session, right? So the discussions that occurred over the course of executive session, and I'd put it to other members of the executive committee, we're hearing things that are leaving us sort of uncertain, correct? I don't know, Brian, you certainly had some thoughts that you may want to weigh in on here.
I would like to, and I guess, so one thing that comes up is, let's just mention and I'll say it generically because it was put out there that a settlement was reached in our terminal connector. And as I read that opinion by the judge, now this is just one judge, and so I am not sure what exactly that means, but according to her, you know, there was some very strong legal questions that she had about what our standing was, what one group thought our standing was and what another thought our standing was. So in my mind, when it comes to this technically sound and accurate advice and proactive identifies and manages risk and issues, these are questions that really jump out at me. Now, I don't know that for sure there was a legal, you know, that we got faulty advice on the connector. I don't know that. But I guess my opinion on this is that I have questions on whether or not this proactively identifying is happening. I don't, it's not fun to write checks that don't have anything connected with them. And so it makes me question whether or not that legal advice was as sound as it could have been, and whether proactively things were done. So I don't know if I said that in a good way, Matt, but
I think your point's taken is that,
doubt.
yeah, and that's one. It's a question that we, I believe, need to answer, and the question before us during this review process is, do we have the appropriate counsel to answer those types of questions and those unforeseen questions in the future? And I'm looking at the rest of the pieces of this evaluation. The rest of the pieces of the evaluation, I think, we could quickly summarize and say that the communications are good and the operations are good, and all of the kind of things that I don't have any concerns with the rest of the evaluation, because the character of the firm of Florio, Perucci, and Steinhardt and Fader, and I don't know how many other partners is excellent, right? There are lots of like, they have the infrastructure that they need to deliver invoices on time, and the communications are great, and all that stuff's all great, right? There's no question about any of that. But this core issue of the soundness of legal advice is the core issue for us. And I want to go back to a discussion that we had in the Finance Committee about the value of periodically changing up your counsel. And not necessarily legal counsel. In that case, we were talking about the auditor. But Florio Perucci has been and Judge Friedberg has been our solicitor for how long?
Florio Perucci's been since 2012.
Yeah, I was going to say, they've been here since 2012, and I think as a letter agreement continued in 14, and it's been that way since.
So only since 2012?
2012.
Okay. So, I mean, that's not it's not baked in forever, but I don't know, I mean, I'm looking at, and that we're providing an evaluation, we're not necessarily recommending at this point that we consider a switch, but the level of satisfaction that I have with the advice, again, it's no knock on Judge Friedberg, he's an experienced individual and he's got a long track record, but as we continue to change as an authority, John, to your point on the various different operations that we have, as we continue to evolve as a region, I'm not sure that right now we're getting what we need for the future of the organization. And I'm not talking about today, I'm talking about looking forward, that we are, the region's evolving, the state is evolving, the economy is evolving, our organization is changing. Judge Friedberg is, he's a retired judge. We might want to, that's something that factors into my thought process on this evaluation, is that the staying on top, and we even ran into this with Kaplan Kirsch, right? They're a firm that has significant experience, but the world's changing around them, right? And we need to work with organizations that have the ability to adapt to a changing world. And Brian, I think that kind of touches to your point with regards to our standing as an organization. I want that's something that I want stated with this evaluation, is that my feeling is that there's not necessarily a recognition of the changing world from the perspective of our solicitor, Judge Friedberg.
Matt, just one more comment. I agree with you. The communication is fine. The way he interacts with us, communicates with us, all of that is fine. And I have nothing personal against the judge whatsoever. I think you've hit on the core of this, and so I'll just submit this as my opinion and let some other people have it here. But really think this sound and accurate advice, especially like you said, moving forward, going, we're going to have other large projects. We're going to have other things that we can't even foresee yet. And so that I think right here in number one is where I have some questions. And so I guess my satisfaction is, I wouldn't say it's completely unsatisfactory, but I would say it certainly needs improvement. And that's that would be my opinion to offer.
And I typically try to offer feedback like this in a way that is constructive and offers some guidance. I think that one of the challenges in this piece is that there's not necessarily any positive guidance for this, right? This is, the limitation seems to be more related to, how do I want to put it? But we just seem limited in our ability to offer positive direction with with my criticisms. And I'd offer for you folks to add to that, or kind of, that's what I'm saying.
Now you're looking at me, huh? Yeah.
Sturshik's also been very quiet.
No, but I'm thinking about this because the role of the solicitor is supposed to be somewhat passive, in my opinion, because it's up to the board to make the decisions and not for the solicitor to steer those decisions. So a lot of times we have to figure out what questions to ask the solicitor and almost get the information out of him. I don't think that he withholds that information. I think he's very good at distributing information to us and legal advice.
100%, yeah.
Yeah, and I think that the young woman who worked on the Majestic issue was very good, and she's part of that firm. So I think they do have younger individuals who might be more in tune with what's going on, like immediately, like able to progress. So I'm not quite sure that that's the argument to transition.
That's a very fair point, and that's, so again, if, to John's point, if we're evaluating the firm and we're evaluating the relationship that we have with a judge, and I think that we all have a positive and collegial relationship with Judge Friedberg, we believe that Florio Prucci seems to have the infrastructure needed to provide us with quick and efficient services. I think the judge, if I can offer positive commentary here, then it may be to get the judge to be even more active in bringing additional folks in. Because although you're saying, you know, I think what we're asking for here, the evaluation criteria are, we use the word proactive a number of times here, and this is, and again, if we have a quibble with how our solicitor evaluation is written, that's maybe another discussion, but we, and Tom, you may want to chime in here, we are asking for, not to be steered by our solicitor, but we are asking for proactive evaluation of risk. And we are asking for our solicitor to give us a heads up in advance of doing anything that there are outstanding issues. And we have seen very reactive approach from our solicitor. And maybe that's on us for allowing for that. I don't know.
Matt, one other comment on that.
Sure.
I think it's not so much in steering us, and I agree with Tara on that. It's not so much in steering us, but if we're going to move forward as a board, we have to know where we stand, and we have to know that the foundation under us is on secure legal footing. If that can't be established firmly, where the board and the staff are confident that the decisions they're making, you know, are because we're standing on firm legal foundation, then we can't be proactive. We can't do that. And so I think that that's the role that I would like a solicitor to play, is that your 2 feet are on solid legal footing. Now whatever step you want to take, you go ahead and do it as a board. I'm not telling you which way to go, but I am telling you that the foundation you're standing on is firm.
I don't know if any solicitor could give that, because I think that the decisions that you make as a board naturally traject you in a direction that gives a whole nother set of circumstances that the judge or the solicitor then has to deal with. So you can have all the possibilities laid before you. You can vote yes, you can vote no, and this is what happens. This is the natural consequence of this decision, and this is the consequence of this decision. And the one thing that I would agree with Brian on is that the idea of not knowing what our standing is was troublesome. I don't understand. This airport has been here for as long as I've been here, and probably much longer. Like, you know what I mean? So 70 some.
As long as I've been here, and I was born here. Long time ago.
So I don't understand why that standing wasn't established, and that I would cite as problematic and maybe a fault in the case because it seemed to be used against us in some way. That could have been prepared for, but is that the fault of the judge, or is that the fault of the preparation? Because the one thing that I know about a solicitor and a lawyer is that they're only as good as you can prepare them. They can only deal with the information that they're given. So if you don't have all the information to them, they can't, like about the organization, you know, or about the situation or everything like that, then they can only do so much.
Right. I think that, so, and I think to be fair to the administration here, their staff has been exceedingly open with our solicitor and has provided them with everything that they would need in advance I think the
I'm
build.
I'm not saying that,
Yeah.
do you know what I mean? But anticipating,
Well, that's it, to build on what you're saying, that one thing you want with with your solicitor is you don't want any surprises, right?
Mhm.
And that's where.
that was a bit of a surprise.
That was a surprise, right? And I think, if I were, perhaps we're rewriting the evaluation, you could just simplify this whole thing to say like,
We don't want
are there any
any
surprises?
surprises.
Right, have there been surprises? And we've had surprises, and we don't want to be surprised. It's that funny, like, the unknown, what are the unknown unknowns out there? And this is why you have a good solicitor, is to help eliminate some of the unknown unknowns and get you down to making them known. If that doesn't sound too, philosophical, but that's where I think we want a little more kind of, to use Brian's phrase, putting us on sturdier ground.
Who would do that?
Matt?
Yes, Mike.
Yeah, you said I didn't weigh in. I was on mute and I tried and I forgot that I was on mute. Sorry.
He was talking the whole time.
I have 3 points. The first one is that I have been involved in governmental and quasi-governmental organizations where it is management by solicitor. And that's an extreme that I'm sure we don't want to have happen here.
Never.
They don't do anything without the permission of the solicitor or solicitors that are involved in the process. I don't think we want to give up that level of decision-making here at the board. The second point I wanted to make is that we have to recognize that we are hiring the firm, not Judge Friedberg, and that the law has, from what I've heard from my friends who are now in the process of retiring from the legal profession, that the law has gotten so specialized that it's challenging to know everything about everything that you are involved in. And so I think that's a point that we need that involved that Florio Perucci brings to the table as a firm, not just what Judge Friedberg brings. And my third point is that I do think that whole thing about what we are, what was sort of was an attempt at trying to throw just to muddy the waters legally. I think we know what we are. I think the legally we know what we are. I think that was just an attempt to screw things up.
Okay. Thanks, Mike. I think that's a really very fair point on management by solicitor, and I've been around organizations like that myself, and I think we're blessed at the authority that we have a good staff, and that we have in that regard a good solicitor that works collaboratively with staff. Again, I think those fit into those subsequent checkpoints on this evaluation, that the working relationship's good. The big question, to your second point on the firm versus the judge himself, is what's the soundness of the legal advice from an individual versus a firm, and how can they adapt to circumstances? John, you had a comment?
Yeah, just a couple of points. One, I was going to say the same thing in terms of management by a solicitor. Never.
Yeah.
Never, 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 never. Number two, and I'm not sure, Tara, whether I misunderstood you, to go back to what Brian had said as well. I would expect the solicitor to tell me whether I'm on solid footing or not, whether we've got case law that supports our position or not, because that'll drive what we may decide to do.
Oh, yeah.
So I thought I might have misunderstood what you said, so I wanted to clarify that.
Totally, but I'm not quite sure that, as Mike said, any solicitor can know everything about everything.
Oh, they won't be able to.
You know what I mean?
Yeah.
But I think that the judge and the firm does a good job of researching that then, and then providing updated emails, and, deliver the information that we need.
Yep.
I've never felt like we didn't have the opportunity to make a good decision with the information that we were given.
I would agree with that. I would agree with that. And the other point that I wanted to make was, and it actually ties back to our accounting discussion. 9 years is a long time. I'm leaning towards supporting an RFP process simply because 9 years is a long time. And I'm a firm believer in board members not overstaying their welcome and professional services firms not overstaying their welcome. I think there's significant value to getting different thoughts, different ideas, different people in the room.
Yeah.
So I've not reached a conclusion in my own mind about that, but that is a thought that I've got. In terms of the Commonwealth agency versus independent agency, Mike, I got to tell you, I disagree. I think the judge really didn't know the answer to that question, and that is very troubling to me. Whether it was thrown out by opposition to muddy the waters, yeah, they did, but we didn't know the answer. And that, to me, is very troublesome, and we should have.
Do we know the answer now?
I don't think so. And that's.
I mean, I have an answer, but it's nuanced and it's long.
So we got to put that on the agenda, because we got to get that answer.
But that would be very helpful for the board to understand what the
And
answer is.
as a legal matter, it's probably best left to
Yes.
In executive session. Yes, I get it. But
Yeah.
I just asked.
Yes.
So, we could probably go on at length around these topics, but I feel like everything's on the table here. And I think that what I'm getting from everyone is that it's generally a mixed bag on this key question. Is that I don't think anybody feels like we're at a 5-star review of performance over the past 12 months, and I don't think anybody feels like it's been a 1-star review. But we're definitely somewhere in the middle. And I think that ideally, we'd want to see something more toward that 5-star. I'm not feeling like we're too close to that. I also know that, again, it's interesting to have this discussion in light of the auditor discussion, because we are, as we progress as an organization, this might be the right time to make a lot of changes. I don't know where, the purpose of a performance evaluation is not necessarily to put us in a position to initiate an RFP process, but it helps us with our decision making. I know this is a lot for Sylvette to try to capture in comments for that, but I think it helps for our team to have an understanding of these issues, and I think we can communicate these to the rest of the board as well in the review should they want to see that. Is there any other discussion for any of these other, so that I don't know if you can scroll through real quickly on those, the evaluation form to just kind of, the work is completed within appropriate timeframes. I don't think there's any question there. I think we're 4 and 5. The relationships with us, we certainly don't get any screaming matches with Judge Friedberg in here. The communication, to Tara's point, we get good, effective communication from the firm. Cost, Todd, I'd put that to you. I don't know if you've seen other comparables. I'm assuming the rate is not, it's not unbearable. We're not, what's that?
It's not unbearable, meaning it's just a funny thing.
Well, I know if I asked John would like to spend $0 with
I
any.
hate attorneys. I hate legal fees.
There's no such thing as a cheap attorney.
4 lawyers in the family had every freaking penny you spent on them.
Yeah, you remember you're in public session, John.
Yeah, that's why I didn't curse.
So again, with all of those, I think we're in relatively good shape. The question is just that overall, is it time to try something new? And go ahead,
I think
Tara.
in that summary, it should not be that Florio Perucci or Judge Friedberg didn't perform adequately or to our expectation. that they did do a good job, and that if this is a progression, it's a progression for like a clean start, just a transition that needs to happen to move into the future.
That's an incredibly fair point. I think that we are, and we could be holding out some, some platonic ideal solicitor in our minds that always puts us on solid footing and is just, that it's a 6 on a 5-point scale.
Right. Yeah, I just don't think it's fair to the firm, and I wouldn't want this decision to be used as sort of like some sort of scapegoat for what happened with the adjustment.
Yeah, and to be fair, we just, the work related to this most recent thing is just the most recent thing. We have, and I'm thinking the conversations that I've had with Tom, and we didn't have the benefit, we did not perform an evaluation last year. I think there are probably some COVID things happening that might have let that slide. But I think back to the couple of years now, and we have the performance of our solicitor has been an ongoing concern, but again, maybe not something that needs immediate redress. But I'm glad, I do want that to be considered, Tara, is that we might just have outgrown our existing relationship, and we may need to look elsewhere just because we've changed a lot. It's not us, or it's not you, it's us.
It's you, it's us. I know. I know. How can we break up easily? I don't know.
So, without anything, is there anything else to add? I don't know if staff has anything to add to
I think we hit on the highlights.
And I just had a question.
Yes, Larry.
When Donchez was the solicitor, was he acting solicitor? Did he work for Judge Freeberg, or what? Was part of the organization?
Attorney Donchez is part of Florio Perucci. I think he was just sitting in for Judge Friedberg when there was some health concerns, I believe.
Yeah, we had that at one point in time, but Rob was our solicitor for a little while.
Was he?
He was. Prior to, and we've had 3 different persons essentially representing us at the table with Florio.
Okay.
Over their time serving with us.
Fair point. Okay, thank you, Larry.
Was there a lack of confidence with those people prior to?
We're evaluating Judge Friedberg and the firm right now, so I don't want to speak to anybody else outside of that for purposes of today.
Understood.
Thanks, Larry.
Thank you.
Well, if there's no other comment there, we can close the discussion of the solicitor's performance. And I don't believe without any other items, I'd ask for a motion to adjourn the executive committee.
I'll make a motion.
Thanks, Sarah.
Second.